All right, we are live. How's everybody doing today?
Yep, sums it up.
That about sums it up.
That was
Oh,
perfect.
of course.
Just real quick while we're live, shout out to Vinny for the thumbnail.
Big shout out to Vinny for the
Gee,
thumbnail. That was lit. I
fire.
love Vinny's work. Big ups to
That dude's a
Vinny.
wizard.
All right. If you guys wouldn't mind, go ahead and leave a like on the stream on your way in. Share it to social media. Let everybody know that we're going live. And I'll be very happy to invite some new players to join us on the stream. All right. Hello, hello, hello. Nice to see you guys. If you wouldn't mind, just go ahead and move some activity on the YouTube stream. It's always appreciated. Let us know how good the stream is, what the fidelity is like, and we'll get straight into it. So right off the bat, I wanted to go ahead and get this this latest ticker that we're looking at. Currently, Revlon is beginning to set up a flag. This nice pennant after a pop after hours, or I should say pre-market. Am I coming through, by the way, guys? Somebody just go ahead and give me a mic check. I want to make sure that I'm actually coming in
Now
loud
you
and clear.
good?
Excellent. Thank you,
Yeah,
Mr. Boulay.
you're coming through.
Thank you, guys. So Revlon is setting up this really nice bullish pennant after a pop in pre-market, and this setup that it's doing right here after a cluster of bullish engulfing candles is the same setup that it had made just before it made a big pop on in early June. It had a large cluster of bullish engulfing candles pre-market and then set up a flag, and it continued making these same pushes. So what I'm expecting is for it to echo the June 16th, June 17th price action going further on into the week. We might see Revlon make another jump. The thing that I found interesting about it is that it somewhat did the same island pattern with this big gap down in post market, and then it consolidated throughout the rest of the week after that big bankruptcy news. So Revlon has started to make that same move where it gapped down and formed an island pattern after repeated market gap downs, and then the volume was non-existent, and now we've got a big volume pop and a decrease in volume here, and that's what I noticed. And we had the same action here. We had this big volume spike the day before on June. Let's see, it was June 16th. June 16th, the market dropped out pre-market on Revlon, and then it popped during the day and then sunk again. And that whole time, the volume was dropping out after a big spike early on in the afternoon, or I guess I would say late morning, early afternoon. And then it moved in pre-market the next day. So I'm expecting similar price action here, especially with it trading just below the 200 period moving average on the 10-minute time frame. The 10-minute time frame, it seems to be respecting that 200 moving average pretty consistently. I did a paper trade down here just to sort of illustrate how I traded the position. What I had noticed was that Revlon dropped out. It had stopped me out of a very small paper trade here as well. So I got stopped out of that order when it gapped down in pre-market 2 days ago, and then it kept going down. So I was waiting to see if it would test this liquidity pool, but it doesn't seem like it's going to. The strength is pushing it in the other direction, and now it's retesting the 200 period moving average on the 10-minute time frame. So I'm going to go ahead and I've marked my position for 390 shares. It was just kind of an arbitrary number, but what I'm doing is targeting a 10-to-1 risk to reward ratio with the price going up to about $9.90 ish. You could adjust this accordingly, but I'm trading it based off of these liquidity pool areas, and what I'm expecting is for Revlon to retest those areas of resistance. If I like its price action and I see it moving continuously, then how I would trade this with just paper trading is continuously moving my stop loss up to a 20% stop loss below the price and making sure that I'm in profit. I would make that first move after it reaches halfway, like up to $7. And if I see it test this area and then recover, then I would move my stop loss to just below this liquidity pool where it had gotten some hesitation and then watch to see it continue. And then I do that for every single liquidity pool that it moves up to. Once it penetrates through that level, then these markers, which if you're not familiar with this indicator, the HTF liquidity indicator, you can search that on TradingView and you can add that to your charts. But yeah, that pretty much covers it. I'm going to go ahead and adjust.
What time frame are you looking at that? Like for the move, you're like max time before you think it's not happening.
My time frame, kind of hard to say. I would give it at least a couple of weeks for it to make this move. This is a swing trade. And if you're not familiar with this, if you don't use paper trading or if you don't have your broker connected in TradingView, this is just the long tool that helps you automatically set up a trade. This is extremely useful for setting up a nice risk to reward ratio. You can see that I have my risk to reward set at right now it's 9.4, but that's just based on where I've set my stop loss and my take profit, and then my purchase level is right here. So you can set those prices and adjust accordingly. You can also scale further into a position based on this tool. It's really helpful. And then there's a matching short tool for taking trades in the opposite direction also. So anyway, that's my rev play. We'll see how that plays out. Again, this is just a paper trade. We're not doing real money here. This is just for fun and also to help educate and show my trading style in real time. And you guys can see kind of what I'm doing. Now, this is a very tight stop loss. So if this gets hit, what I'm looking for is for it to cross down into this liquidity pool and then see if it recovers. And then I would take another long trade and set my stop loss down below the wick of wherever it gets at the lowest point. And then again, moving my take profit to this level, because this is the level that I am trading to. This is just a initial position. The other thing that you can do is you could just continuously average down. If you're feeling confident in your trade, you could just remove the stop loss. But if you're doing day trading, that's bad practice. You should always trade with a stop loss if you're day trading. Weber is another one that I'm looking at. This is actually getting very close to one of my levels, so I'll go ahead and do another real-time trade right here just to show you what I'm looking for. I'm expecting Weber to drop down to 682 and cross this level, and I'm going to go ahead and set an alert for this one. If it crosses this level, then I would wait to see for confirmation. Again, this is me trading based on liquidity pools. So what I would be looking for is for the stock to have a deep wicking candle down here and for it to immediately recover. If it doesn't immediately recover, I don't take the trade. I would wait for it to drop down to this level, which would be my next, this is the next liquidity pool down further below. And if you're not familiar with these, what liquidity pools are is just basically looking for consistent price action where it bounced off of supports and seeing when it crosses in these levels, because what you're speculating is that the institution sees a lot of stop orders and limit orders in these areas. So the idea is that the market makers and institutions will drop the price to those levels and use that as a psychological attack on retail investors and day traders in order to scoop up shares or to hit their stop losses. In this case, it would be taking a long trade. So the institution stops out all the weak longs, whipsaws the weak shorts by going in the other direction, and takes all their shares on the way up. and then you would play this to the upside, going to the next liquidity pool. The idea with this style of trading is that you're taking a very large risk to reward ratio with a very tight stop loss. So if you're wrong, then you're wrong small. But if you're right, you're up huge. And taking like a 10-to-1 risk to reward ratio is a very it's a very nice risk to reward ratio, such that you only have to have, technically speaking, you only have to win on 10% of your trades in order to break even. So if you're good at this, if you get those fills at those ideal prices, and you are correct on your assessment of the technicals, then you can catch these big swings. But you got to look for structure. And right now, Weber is consolidating right now. It's a very large consolidation after this huge expansion right here. So I'm looking for Weber to consolidate in this range and see what it does. All right. Hey, everybody. Welcome to the stream. Everyone who's new here, really appreciate you stopping by. This is Hell's Trading Floor. I'm True Demon, the Devil Stockbroker. This is just a live stream where I've invited the entire Discord to hang out with us while on stream, just because it got a little bit boring and quiet these past couple of days, and I figured it'd be nice to invite some other opinions onto the stream. Y'all need to behave yourselves, of course, but as long as everybody can behave, we can all hang out.
Do you mind if I ask you a question, True Demon?
Sure. Who is this?
This is Goose.
All right, Goose, go ahead.
The green and red tool that you're using there, the one that you're measuring the liquidity pools with, what is that called?
This is called the long tool in TradingView. It's over here in this section. This is in the prediction and measurement tools. So you do long position or short position if you're looking to take a long or short trade.
Awesome. Thank you very much.
Yeah, no problem. I have this in my favorites bar as well. I like to have these tools available and ready to go for me at any time.
TD?
Yeah, what's up, my dude?
Yep. Just for information, your left side of the screen is clipped off.
Oh, is
so
it
we
really?
don't see we don't see the buttons on the left side there.
Ah.
We saw the menu, but not the buttons. The first button you put.
Thank you for pointing that out.
It's dropped out.
There we go. That
Rev is popping on volume.
Oh yeah.
There we go. Okay. There we go. Okay. Let me know if that's better.
That's better. That's perfect.
Thank you for letting me know.
It's like magic. You just call, Rev is gonna move, and it just moves. Like, wow.
Wow. Revlon. Just revving up for the next run. Go, baby, go.
Down by our resident halt bot.
The halt bot. Nice. Yeah. ScourgeBot, if you're new here and you haven't hung out in our stream before, Hell's Trading Floor is not just a YouTube channel. We also have a dedicated community of day traders and swing traders. We've got a lot of really well-educated and experienced traders here in the group, but our big focus is on education and also sharing of market data. So we went to the trouble of building our own ScourgeBot, which is our proprietary stock market trading and analysis bot. And this bot is available to all users of the Discord. Only professional members. If you want to sign up to get into the Discord, you can sign up through Patreon, and you can join us here in our Discord. The smallest membership is just $3 a month. You can get in and get access to the trading floor and talk to everybody and get access to all of our free bot tools. But we also have the Scourge bot, which will call out big squeeze candidates from time to time. It alerts us on volatility halts and even FDA approvals or denials. It'll let us know any FDA announcements, Consumer Protection Agency announcements, any kind of basic, big news from the exchanges or the major regulators. And it helps us call out all of these different plays, such as Revlon. If there's any other guys here in the chat, if you have any big plays that ScourgeBot called out for you, let me know what they are.
I actually just want to point out the fact, anybody that doesn't know, that FDA alert and the recall alert, we came up with that in live chat, and then the developer, Flabbergang, had it up and running in like 30 minutes.
That's right. That was an amazing moment. Yeah, we actually coded that up and implemented it on the fly just because it was an idea that was come up with while we were on stream. And it immediately called out at least one play to us. I'm trying to remember what it was. It called out an FDA approval that had like literally just happened a second like minutes after we implemented it. But big shout out to Mr. Flabbergang, who is he's our core developer on ScourgeBot. It's basically his baby, and he is responsible for all of the awesome features that have been worked into that tool. Hey Fish, I see your question there. Thoughts on Excella news and the recent shark fin move on it? So I didn't read the entire article on Excella, but the big news print on Excella, as I recall, was somebody, if you wouldn't mind posting the article in the chat so I can pull it up here on stream. But I recall that they were mentioned as the top candidate for outsourcing finance and accounting outside of the U.S. And that was a huge announcement because it came from a third party, and it was just kind of unexpected, just black swan type news. Not a huge, event, but that caused this big market push. And then just like every other time before, Excella got pummeled into the dirt. And I want to preface this by saying I am biased because I am long on Excella, but the company, which is currently not in the best financial shape, they're losing they're losing more money than they're making right now, or at least they were as of the last several months. And they had some debt that they were working on getting paid off. But what upset me the most about Excella was that let me see if I can go ahead and pull up my chart here. Which layout did I have this on? Hold on, I gotta go find the layout that I had on it. Excella might have been on my naked charts. Yeah, it was here on my naked chart. So on Excella, there was multiple. God, what? No, it wasn't on my naked chart. Where did I have this? I gotta go find it. Sorry, guys. I had all of the dates marked out for when Excella had big news. Here it is. Okay, here we go. All right. So this is where I draw all my tinfoil hat stuff. I should just know if I'm being tinfoil hatty, it's in the tinfoil hat layout. So Excella was trading in this big bull channel, right? And it's been in this channel for a long time. The oldest news, which hit on March 22nd, Excella announced that they had listed a preferred stock, and they did a stock buyback. So they were converting common stock, their Class A common stock, to preferred stock, where holders were able to convert, I think it was 10 shares of common stock to 1 share of preferred stock in order to consolidate voting rights, and they would get and the company was paying shareholders to do this so that they could consolidate stock, reduce their float, and establish a preferred stock. And the stock dumped on this news, which is typically seen as bullish because it insists on confidence on behalf of the insiders of the company. They believe that the company is in a good place, so they buy back stock and convert common stock to preferred stock. And the company just continued selling off during this period. And as well, on the 18th of April, they announced a $100 million share buyback, which they were offering at a price of $1.25 per share to buy back $100 million worth of stock at that price. And the stock only moved by it moved pre-market by about 5 cents. And then it sold off right after that and kept selling off for the rest of the month. And now the most recent thing was that they had a contract with XBP that is $136 million of new annual revenue, and that is a 5-year contract. That hit on the 22nd of June, and the day before that, they announced that they had deferred their short-term debt into long-term debt to the tune of $150 million for a $6 million annual rate of interest savings through PNC Bank. So they found a better financing deal, and they deferred $150 million to long-term liabilities, which is fantastic news. It basically means that they've saved $6 million every year in their interest from high interest loan payments, and they were able to defer the debt so that they don't have to pay all that off for the next 5 years. So all of this good news hitting at the same time, every single time the stock just sold off. And the same thing happened again today when they were announced by this third party out of nowhere. No one was expecting it, saying that this company is great for contracting services in finance and accounting. And the stock popped today in the middle of the day all the way up to, let's see, it was about 13.5 cents at the high side. And then now it's sold off back to where it was. It's the same move that happens every time. The stock has good news, stock pops, sells off the next day. Just done. And that's it. Now, this wasn't like particularly crazy good news. It was just like kind of an endorsement from a third party. But it's the same exact move that happens every time. And what upsets me about this is that every single day when this happens, if you go back in time, I'll go ahead and pull this up on our Scourge bot just so that everybody can see how good this bot is and how useful it can be. We track short exempt and FINRA short volume data using ScourgeBot. Oh, I can see that I've gone ahead and lost my stream connection. Hold on. Let me go see what I can do about this, guys. I'm sorry.
That might have been a bigger issue. So my Discord and stuff just tweaked out too.
Yeah, it's not just you guys. YouTube is buffering for me too. It's showing that Okay, I think we're good now. I went and paused a few things and killed some extra windows that I had just sitting open for no reason. Okay. All right. Yeah, so here's just an article from Excella. This is actually their announcement. The XBP contract totaling $136 million hit on June 22nd, and then their $150 million securitization facility with PNC was closed. This all fantastic news, and I don't get it. It doesn't make any sense that the company is selling off, and as I was saying, when you look at the short exempts that hit every single day when this occurred, then suddenly it makes sense. So let's see. Here's May 26th when they announced the let's see, May 26th. They had a sudden surge of short exempt volume, or I'm sorry, May 25th. Sudden surge of volume, just a whole bunch of buyers jumping in, and lo and behold, that was the day after their stock suddenly sold off and gapped down 2 days in a row. You go back to here when the short exempt ratio was more than 20%. That means 20% of the shorts that were traded that day were all short exempt. That date was May the 10th. So go back to May the 10th. That was the day that they just suddenly dove off of a cliff. Market makers just turning off the buys. Oh, that's right. That was their earnings date. So that was their earnings date, which let's see, they took a surprise loss on their earnings, so it's not great news. But their stock had been pumping the day before, and I'm assuming that that was market makers just pushing the price up to get it nice and high and get a bunch of bag holders in after hours or throughout the day, and then they tank the price first thing in the morning. They just took it down. $100 million share buyback on the 18th of April. That's this date. Look at that. Short exempts were 211,000. Let's go ahead and take a look at the day of their preferred stock listing. That was March 22nd. So they make this announcement late March 22nd. The actual offering goes into effect on the 24th. Short exempts are through the frickin' roof, and the stock sells off again, every single time. And then there's a just sudden surge of buying on the 31st of March after it closes. So every time something good happens to this stock, for whatever reason, the faucet of short exempts in the liquidity fairy turns on and starts murdering the stock. And then once all of the good news is over with, then there's a pop in the stock's value, and then it sells off immediately afterwards again. It's just them recycling short exempts, trying to turn off all of the buys going to the exchanges. They reroute it to their internalizers, and then they take those shares out, quote, on loan that don't exist and that they don't have access to. And they use short exempts because they don't have to locate them for 6 days. There's a T+6 settlement time for them to actually have to deliver or prove that they've located those shares. They don't even have to deliver them after 6 days. They just have to prove that they've located them and then go borrow the stock. They don't have to buy it. They can just borrow it from a broker. And that's how short exempts work. And by the way, only market makers and broker dealers have access to these, but primarily it's market makers because it has to be used for legitimate market making activity. Legitimate. Air quote. If my dripping sarcasm wasn't enough to tell you where I stand on this bullshit. So, yeah, here we go. Excella, all the way back down at 11.5 cents. It's great, isn't it? It's hilarious. It's just fucking great. So I see a lot of people asking, like, how do you do anything about this? Well, the only thing that we can do is buy from the exchange. Don't buy from a market maker. If your broker doesn't let you route directly to an exchange, then you can't do anything about it. Any share that you buy is just going to go to a market maker, and the market maker will fill you with a short exempt. And then 6 days later, after they've taken the price down by another 15%, then they'll go find the share to deliver from somebody who gave up and decided, like, fuck it. I quit. And that's how they do this. That's how they play this game. And I've messaged Excella's investor relations desk. They want to give me a phone call. I have not scheduled that phone call, but they've said that they want to have a chat with me. And I'm going to go find out what the word is. But yeah, that's the whole story. And it sucks just as badly as you think it does. The only thing that really works in these cases is when enough buying pressure hits the exchanges and actually affects the NBBO because it bypasses the market maker. That's the point. You have to bypass the market maker. It's the only way that retail will ever win is if we're buying directly from the exchanges. And this is something that I know that Matt Kors and Trades and AMC Bigums and Wired and so many other influencers on Twitter and YouTube have been hammering and harping on for the last several months. And I know there's still people that are ordering their shares from brokers like Robinhood and Webull and anybody who uses Apex clearing. They're just the orders are not getting seen by the exchange. It's just not happening. So unless that changes, unless people start going like, hey, I want, like, call the broker and say, execute my order on the New York Stock Exchange or the NASDAQ. I order it from there. And that's how you affect the price. Otherwise, the market maker just internalizes the order and sends it to a dark pool. If you want more due diligence, like I've talked about this enough in my last video from yesterday about Accela Technologies short squeeze suppression, just go ahead back in my channel and check out the video from yesterday. It's all there. I go over everything, including dark pool and off exchange volume compared to the regular exchange volume, and I compare it to a blue chip stock and everything. You can see the full analysis there. It's all the details are there. But like I say, if you want to invest in Accela, it's a do it at your own risk thing. I am invested in Accela, and you know what? At this point, I expect to lose all of my money. But on the off chance that I am correct and the market maker is just screwing with this thing and they end up in a liquidity crisis, this is going to be one of those stocks that pops because they can cover it for pennies, and they'll eventually fill all of those shorts that they have rolled out and kicked the can down the road on for the last, oh God, I don't know. How many fucking weeks has this been going down? Like, look at how far sold off Accela was. This popped because of a reverse split. This thing is sold off from over, yeah, it was IPO'd at $30, something like that. This thing has had a 95% sell-off. 98, 99% sell-off. So if for whatever reason the market makers have to cover this in order to, like, if they're forcibly made to do so, then yes, Accela can absolutely pop. But I don't know. I've emailed Accela staff. I said, get the SEC involved, call somebody, do something, investigate it, and get a lawyer to subpoena all the records from the market maker because they're fucking you. And demonetized. Yeah, it's kind of expected. I can never control myself.
And you expected us not to swear.
That's right. Do as I say, not as I do. That's the rule here. I see Revlon is popping. It's looking very nice. It's a good paper trade.
Enjoy Technologies files Chapter 11 to sell itself.
Ooh, interesting.
What's the ticker on that one?
ENJY. It just actually had a pop.
That's Ron Johnson's company.
I was about to say ex-Apple executive runs it now.
Yeah, Rojo. He used to be the CEO of Target, too, in its prime.
There you go. There's a play.
He's an amazing retail leader. So, I mean, he knows what he's doing in that regard. It's an interesting company. They're a tech company that specializes in. Imagine if big box or stores like Best Buy or something like that, with all the tech and stuff, came to your home with the product, set it up for you, and showed you how to use it. And that was just literally the only way you purchased from them.
There you go.
Which I can understand why they had trouble during COVID times.
Check the chart out on the daily and then look at the volume over the last several weeks and today. And there was a gap down overnight between yesterday and today.
So when did that bankruptcy notice come out? When did that hit? Is that literally just in the last
45 minutes ago?
45
I was
minutes
going to
ago?
say that had to have been real soon.
Yeah. That's a good play. That's a good play if you're willing to play a little bit risky. Chapter 11 bankruptcy is not the end of a company. A lot of times Chapter 11 bankruptcy just means that they get liquidated and they're put into a position where they must where they must sell and liquidate assets. But if they get bought out by another company, like that's the opportunity for big companies, like, you know, if somebody wants to get access to all of their infrastructure or something like that, or all of the assets that they hold, they just buy them out of their debt for pennies on the dollar, and they just soak up all the equity in the company. And this thing's trading at 22 cents. That's the same thing that happened to Revlon, by the way. So Revlon moved down here ahead of its bankruptcy notice, and then it filed for bankruptcy and got paid out on its debt. Was it a third party JRUF, or did they renegotiate internally with their financier?
So there's some stipulation there that I'm curious about, because one of the things that came out was, if I'm not mistaken, they had paid off a loan, and it was, but on their books they did not have it marked as paid off. So there was suddenly this debt that wasn't there.
Ah, I see. Okay, so they made a clerical error, and it worked out in their favor.
It's what it sounded like.
Gotcha. Well, in which case, Revlon moved up after they revealed that, oh yeah, we just goofed on some debt. We actually paid it off. Surprise! And then the stock goes taking off towards $8. So for a stock that was sold off down to $1.12, that was, if you had bought the dip at that level, which that's a pretty big gamble to take, but 700% profit. Can't be upset about that. So you know what? I'll just go ahead and say it. I like the sound of Enjoy. Enjoy Technologies sounds like it's a decent gamble. Chapter 11 bankruptcy sounds bad at first.
You enjoy it?
I am saying that I enjoy it just a little bit. Just a little bit.
Have you looked at trading floor text recently? There's a short exempt ticker out there that Dr. Verde is looking at.
Oh, is that so? GOEV, it's back, huh?
No signs of life, though, he says. But the short exempt ratio. Woo!
Wow, yeah, that's pretty impressive. It's selling off right now, and we're already past the T+6 settlement date on those. 1, 2, 3, 4, 5, 6, yeah. So there could be a pop later on today, but GOEV. Let me add this to my squeeze playlist. And I'll check out. I'm not going to pay attention to BCC right now. BCC is a short play. They're a lumber company, Boise Cascade, if people are curious what that was. It's not my exciting plays. It's like the boring play that you buy puts on forever and you wait for the commodities market to wash out. But if lumber goes like to pennies like it's been doing, and the construction for houses just dries up in the Pacific Northwest, which is likely to happen since there's a lot of risk in the housing market right now, then Boise Cascade will lose a lot of business. So that was my bet for that one, if people were curious. GOEV. Okay. Well, let's see. We've got this. Looks like a descending wedge. Ooh. A very pointy descending wedge going towards earnings.
You're still on Scorchbot on YouTube.
Oh, my bad. There we go. Descending wedge on GOEV. Thanks for letting me know. I always make that mistake all the time. I was looking at BCC's chart. I guess nobody even saw what I was talking about. I see Redbox also made a move today. It's retracing a bit, but that's interesting. Okay, so GOEV, short exempts. That is curious. It is very curious. I'll set some alerts on this. I want to see it break this wedge. it's breaking down lower and lower. I wouldn't jump into this just yet. I would wait. I would wait for the pattern. Wait for the pattern to play out. Wait to see what it does. Playing this one. Oh man, and it's an even bigger descending wedge. It's a descending wedge within a descending wedge. Well, it can't go any lower than that.
Have you seen this market?
They can absolutely reverse split. I forget what this company even does. Consumer durables and motor vehicles. 116.9 million float. Good candidate for a reverse split. Oh my god, they're hemorrhaging money. Oh my god. No revenue. Massive losses annually. Loss. Oh my god. Why are analysts rating this a buy? Canoe Inc. manufactures electric vehicles. It's designed for modular electrical performance, purpose-built to deliver maximum vehicle interior space and adaptable to support a wide range of vehicle applications for consumers and businesses. Company founded August 2018, headquartered in Torrance, California. They're a competitor with Mullen. Go figure. For EV maker Rivian, delivery headache hits as market shuts down coffers. Potential resale of up to 48 million common shares by Yorkville Advisors managed fund announced May 23rd. Okay, so sell-off, bounce, and sell-off. Interesting. Production starts could slip. CEO is confident in funding. Chosen by NASA to provide electric vehicles for moon exploration crew. That's pretty cool. Not enough to move the stock, but it sounds pretty cool.
To the moon.
To the moon! GeoEV is actually going to put its products on the moon. Or maybe Mars or something, but whatever, you know. I'll take moon or Mars, whatever. Let's go check out the SPY because I actually started this stream because the market was looking sketch as fork.
Save.
Nice save, thank you.
Good save.
These forking charts make me so GD mad as HE double hockey sticks.
What the heck in heck?
It reminds me of that show, The Good Place.
The good
Oh,
place.
it's so good. Yes. Everybody needs a Janet.
So good. So good.
I'm hearing a lot of the same voices. If y'all are in the trading floor chat, you have any questions or you want to check out something that's in the tickers, feel free to let me know. I apologize, YouTube chat. I've just been kind of away entertaining everybody. They announced the closure of the listing and the stock pop for all of about an hour,
Wow.
and then got
Run
crushed
up
again
laugh.
after hours.
Funny guy.
And it just
You've hit all the big ones that people have been asking about. We appreciate it.
awesome. Yeah, I'm looking to YouTube chat to see if there's anybody else that's been asking things. Oh my god, the chat updated on YouTube. ENDP breaking out incoming. I could take a look at it. I'm not invested in ENDP, but I did hear about this on our Reddit board. Which, by the way, if you don't know, Hell's Trading Floor has a Reddit subreddit. We have an official subreddit called r/Hell's Trading Floor. You can check it out. We are heavily focused on DD. We're not a meme group, so I know that a lot of people are posting memes. I don't have too many mods for the Reddit group yet, but I am trying to focus that subreddit on building and writing research papers, not just talking about memes and stuff like that. Which it's fun, but in excess, it just becomes spam. There's enough boards for that on Wall Street Bets. If you want your memes, go there. We're here for the research and to make money. I want my money, man. Yeah, ENDP is getting volatile, which is nice. These big pops, though, you got to be careful of. Let's look at the hourly chart and see what kind of technical patterns we got. All right, we got a MACD cross forming, but it's going to be in a negative. So a cross in a down channel usually just means consolidation. So what you're probably looking at happening here is consolidation going out to the near future. Watch for it to be trading in this range. I can see this range is going to take a few days unless something crazy happens, which I don't know, it could. But you're at support. So if you want to buy shares, good spot. Good spot. You might get filled down at these levels. This is a liquidity pool. You can try and set fill and limit orders down here. There's another one that's down here as well. So 28 cents. So if you want to try to get a better fill, you can split your orders and set fill limit orders. You can set limit orders at these the 32.85 cents and 30 and 28 cents, and you can try to get filled in those areas. These liquidity pools get hit occasionally when the market maker drags the price down, and then they'll spike through these levels to hit everybody's stop orders, and they'll entice shorts to take a position, and then they'll yank the price back up to the long side and carry the price away. And it happens so quickly that people usually aren't able to catch it. So you have to be watching these levels and setting alerts. Don't trade as soon as you see the spike down. Wait to see the spike down and then a recovery within 10 candles. The trick is to go on the 5-minute or the 1-minute chart. Watch these price levels. Look for the rapid just collapse of the price for it to go down below both of these levels. Watch to see a rapid V-shaped recovery within 10 candles on a 1-minute or the 5-minute time frame. If you get that recovery and it reclaims support within 10 candles, then you could take your trade to the long side. And if you're going short on a stock, this can happen to the long side as well. If you're seeing high structure, like it's consolidating after a big run on the bullish side, then you watch to see if it breaks a level on the opposite end and it just cracks through a ceiling and then collapses back down. It recovers and reclaims the resistance, and that tells you that the market makers are taking it to the downside. I have a video on this called Liquidity Hunting. You can take a look at that on the channel if you're interested. ATER, did it break out? I was watching that. ATER looks pretty good. No, this isn't a breakout. Oh, it dipped into the liquidity pool, though. Okay, I see. Yes, we had a dip into the liquidity pool. Oh, I didn't set my alert. Well, that's okay. This is it. So it broke down and dipped into the liquidity pool. Let's see if we have something on the hourly chart. Yep. Wait for a little while. Wait for a little while and see what happens. Check to see if it reclaims this area of support. It needs to break back above 215, hold it. But that big volume with the wicking candle, that's a good sign. It's not as deep as I would have expected it, though. I was expecting a drop down to like $2. Look for deep wicking candles, at least to 205. But you can see that this even trips out super trend. Super trend gets tripped out by this stuff. I bet you it'll throw a buy signal on this if it reclaims that 215. Super trend will go ahead and mark this a buy. Now this is what you're watching for. This is the fake out happening here. We're gonna kind of study this a little bit. So it's teasing that liquidity pool level. It touched it, but it bounced, right? And this is where the market maker entices people and tricks them. So if this is a regular bounce, then it'll just continue to go up and consolidate and go up and consolidate, and that's normal activity. But a liquidity hunt is when it breaks through this level and it starts to recover slowly and then suddenly crash and then it recovers rapidly and reclaims support like so. This is a liquidity hunt. Just crashes the price, recovers quickly, and then on the other end of it, the price goes fucking bananas. That's a liquidity hunt. And if you trade liquidity hunts, you can trade for like 10 to 1 risk to reward ratios, and you can hit these levels. And that's what you trade for. So if you're interested in a trade like this, looking for those opportunities can be very, very profitable. But it touched this level. Now you want to see it break this 215 and hold it. You need to see it break this level. What helps is moving averages. Wait to see if ATER reclaims this 20 period moving average on the 5-minute and hold it. Because what's been happening is it breaks through the 50 moving average and then crashes back down, and then it breaks it again and crashes back down. This is hunting. This is institutions hunting right now. These big deep wicks, like this one, that was somebody that was trying to just hit some weak shorts. As soon as you see these big deep wicking candles in either direction, that's a hunt. I've been studying this stuff quite a bit, and it's really improved my my paper trading strategies. I'm going to go ahead and prepare a long position here. Okay. They're getting ready to drop it. They're getting ready to drop this thing. So this is a paper trade. I'm not using my real brokerage account. We'll just do this as if we were doing regular trading style, okay? So what I am waiting for is for them to smash the price back down into this level. And what I'm going to do is, if whatever the wick gets down to when they crash this thing, they'll probably drop it below $2.05, or that'll likely be their target. I'm going to drop my stop loss to just below wherever that wick ends up being. And as soon as I see the support here at 215 reclaimed, I'm going to go ahead and do my buy. Okay. So we wait to see what they do. But I have a feeling it's coming. They're going to crash it, and then it'll recover this 210 area, and then you can go ahead and take a long position. That's how you trade a liquidity hunt. But I'll do this like a swing trade and trade it to the next liquidity hunt, the liquidity level, for a 10 to 1 risk to reward ratio. You can do smaller risk to rewards like 5 to 1 or 3 to 1, and you'll increase your likelihood of getting filled for your take profit. But that's just one way to do it. The pattern that I'm really looking for is a 3-line strike or a big engulfing green candle or something to the upside. But we'll just wait and see what ATER does. I'm not taking a position yet. And again, this is just a paper trade. All right, just want to make that clear. We are in learning. Okay. Mullen has to come out with F500 news today, otherwise it will tank tomorrow. I guess we wait then and we see what Mullen does. Redbox. Okay, we'll take a look at Redbox. Right now, trading in a channel. So it is a bull channel. You just got to wait for that breakout. It needs to crack through 750, and then you'll be back in You'll be back in the right direction. This big volume spike here is encouraging because it's separated by a lot of low volume, but you don't want to get faked out because this could just be institutions that are trying to hunt for weak longs. What I think the level I think they're going to try to bring it back down to is more like $5, and they took away the options market here, so you got that going for you. The options market is kind of it's really not that great of a thing. It's good for leverage and all, but that's where institutions make their money. I am upset the way that they took away the options market. It's extremely unacceptable. They just literally just took it away and told everybody you have to sell at dog shit prices, and basically everybody's contracts, even if they were in the money, were not worth what they should have been. It was highly upsetting. Highly, highly upsetting. I just realized that my avatar on the live stream is covering up another avatar. I just realized that.
It looks like you're eating your own head.
It does look like I'm eating my own head. That's pretty funny. I don't know how to make that go away though. For whatever reason, it's just taken over. Oh well, I guess I'm just gonna eat my own head. That's funny.
Very Hell's Trading Floor.
Subscribe by clicking my face that's eating my other face. We'll figure it out. I'll fix it at some point. But that was pretty funny. Thoughts on BRQS? Oh wow, we haven't talked about that one in a while. I really want to talk about the broader market instead of covering all these other penny tickers, guys. Like I don't want to talk about like penny tickers constantly. Okay, so BRQS did its reverse split, and now they're already getting back below $1, or they're threatening to. They need to at least stay above $1 for 7 more days. If they can stay above $1 for 7 more days, then they won't get delisted. But things are not looking good for BRQS. Market makers are murdering them right now. I don't suggest trading it at the moment. It's not in good shape. It's one of those situations where you're fighting against Wall Street itself, and the might of Wall Street dictates everything about a penny stock. If they want this thing to die, it will die. The best thing that can happen to BRQS is if their partner Qualcomm buys them out, which is a condition that I have considered, but yeah. Z-Rob, please stop spamming about PSNY. I will get to it in a second, all right? Please don't do that. Just spamming tickers at me is not the way to get my attention, all right? I see the chat. I can see like literally all of your messages. I will go take a look at it. But I want to cover the broader market first because what's happening right now is a little bit more scary, honestly. It's a little bit more prevalent. Flabbergank, don't test me. I will ban you from the channel. You being an analyst and a dev does not exempt you from my wrath.
But I said don't cover PSNY.
Oh, can I not cover it? All right, I see. I'm sorry. I just glanced at it and saw you, and then saw it cover PSNY, and I was like, "Oh, you're trolling me." Okay, banned.
It's a fair assumption.
Okay, so the S&P is looking extremely sketchy right now. right now, inflation numbers slightly improved according to the the PCE report. Right now, the numbers have slightly improved, but it's still basically break even at the moment. Inflation is not under control right now. And this report is different from the CPI index. It is very different from how the CPI reports inflation. This report was quoted by, according to Jay Powell, it is, quote, more popular. I don't know about that because honestly, I've never even heard of it before yesterday. But I heard that it was coming out, so it seemed relevant to what the market was doing. We also just had the GDP report, which shows a massive loss in the gross domestic product of the United States. It is worse than expected. The GDP print was absolutely awful, and it does not bode well for the continued productivity of the United States overall. We are now, that is enough markers to declare that we are in recession. That is enough to say we are in recession definitively. But Jay Powell won't say it. So don't listen to what the Fed is saying. Listen to what the data is saying. We are in a recession now. It is official. And the market being propped up today, like this is not a rip. This is not a rip, and this isn't even crash right now. When you see crash, you'll know it, you'll feel it, and so will everybody else. When you start seeing people crying in the hallways about losing their entire 401k, that's when it's a crash, all right? So I don't want to hear everybody like going, it's a crashing. And I look at the chart and see it's like, it's down 1%. Calm down. But anyway, I am expecting a crash in the SPY. And I was talking about this in the trading floor. So everybody who is listening on YouTube, especially if you're not in our Discord, I would encourage you to pay attention. Let me just preface by saying this is not financial advice. I'm not a financial advisor. I'm not even an investment professional. I'm an amateur investor, and I could be totally wrong about this. You should absolutely do your own research. You know the drill. I can't tell you what to do or how to trade. It's your money. Use it when you need it. Sorry, I couldn't help it.
Oh my god!
I'm sorry, I couldn't stop myself. So right now, my biggest plays is I'm basically shorting the real estate market. I am either going short, as in buying puts, or taking short shares against the XLRE index. That is XLRE, Real Estate Sector SPDR Fund. This is the real estate ETF for Standard & Poor's. It's currently starting to show quite a lot of weakness. And ever since this consolidation, when the big gap downs happen, oh God, did my puts print. Oh Lord, did they print. The thing with XLRE is that right now it's showing high volatility, and these puts are cheap now. The July puts are a little bit close, but I am expecting downside in the near term. If you're expecting downside in the near term in the real estate market, what you can do is you can go long on DRV. DRV is a leveraged ETF that shorts the real estate sector. It basically does the inverse or the opposite of whatever XLRE does, to the tune of 3 times more volatility. DRV is slightly riskier because there is drift. That's where there is decay in the value of the index over time because of restructuring that is required to create this leverage. So DRV goes down frequently, especially if the market is moving sideways. So if the market is up or sideways, if XLRE goes up or sideways, DRV goes down 3 times heavier. And that's something to be aware of. With DRV in particular, this one has better drift than a lot of other ETFs, but it's still there, so be aware of that. Your broker also may not let you trade this if they don't let you trade leveraged indexes. All that out of the way, calls on DRV is a short against the real estate market, and this one can go like crazy. If I were to illustrate this by showing you what happened during COVID. So this was the daily chart for when XLRE moved during COVID. The market was pumping, just doing so wonderfully. And then all of a sudden, early February to the end of February, it moved. Wait a second. I am in the wrong year. That is the wrong year. Ignore that. We got to go much farther. Here we go. Here we go. Here we go. Here we go. Now this is what DRV did. The entire market sold off by about, I think it was 40% during the COVID crash. DRV in a single month moved 240% from low to high in 1 month. 1 month. It's nuts. This thing is extremely useful for taking short-term leverage bets against real estate. This was a black swan event with COVID and all, but this is a way for you to take some big levered bets against the real estate market. You can make some really good money on this, especially if you don't have as much money to buy a appropriate amount of puts against XLRE to get leverage. DRV cheapens it up a little bit. With XLRE, though, you can get puts right now extremely cheap because the market is, quote, bottoming, according to all of the so-called experts, and it's not bottoming. We're in for so much more pain. It's just my opinion. You don't have to listen to me. But even just according to this chart, which is starting to show a bull channel to me right now, only the beginning of one as well. I do expect XLRE to just keep going down like this. And if we have another capitulation, like if we have another crash like this was more like a, I wouldn't say it was a crash, it was more like panic, but it dropped by 20%. That's huge for XLRE. An index like this should not move like that. So if this happens again, if it has another 20% drop, then I'm expecting the week after that for it to drop as far as 50%. So XLRE, not in good shape. Very much not in good shape. By October, I'm expecting a 1929 crash, 1929 style crash of the housing market, as well as 2008. You could also look back at that. Most of these ETFs didn't exist like that before. But as I was saying, with XLRE, basically remember that DRV does 3 times the opposite of whatever XLRE does. So you notice that XLRE did a move to the downside during the COVID crash of negative 40%. Well, XLRE moved up positive 260%. So that's, just to give you an illustration of how much more drastic these moves can be. And to be honest with you, I don't think that we're even going to hit the bottom here. I think it could be a lot worse than that. I think it'll be a crash, a bounce, and a second crash to drop it down to somewhere in the $15 to $20 range for XLRE. It doesn't look good. Real estate is in bad shape. So those are my thoughts on the market overall and the housing market in particular. SPY as well is not particularly healthy. It is going to move down with the rest of the market. If you want to play short bets against the SPY, I'm also choosing SPXS, which is just like DRV is inverse to XLRE. SPXS is inverse to the S&P index, or SPX. So whatever SPX does, this does 3 times the opposite. So if XPS drops by 1%, SPXS will rise 3%. So you get calls on this, and you can ride it to the upside for, say the S&P had a 5% drop. That would be like blood in the streets for Wall Street. They would definitely be panicking at that point. Then you would see this move up by 15%. And you can see that we had that move happen here, where SPX on the 5% drop across the week back in early June that we had not too long ago, that 15% drop in SPX over the week resulted in a 40% rise in SPXS. There's also SPXU, which is the Pro Shares, which it basically does the same thing. It's also an ultra short index. This one moved up by 40% that same week. So 2 options for levered bets against the Standard & Poor's index. You can also go on the short Qs. That's SQQQ for shorting the NASDAQ. You can go for SDOW, which is shorting the Dow 30. Same situation there. So whatever Dow does, short Dow does the opposite. Go ahead and throw SDOW on there. So here's the Dow going up and then crash. SDOW just kind of took off. It's a nice rise for SDOW. So
For the SQQQ, do you play that with calls or puts in anticipation for a crash?
if you are anticipating a crash, you go long or buy calls for SQQQ. So if you're expecting, it does the opposite of whatever the Qs does. So if you're thinking the Qs are going down, you go long on SQs.
Thank you.
Yep. Make sure you understand these inverse leveraged ETFs because you get yourself into trouble really quickly, especially if you meant to go in the other direction and you buy the opposite of what you meant to and you are right, you're going to feel extra bad.
Now, is the SQQQ geared like the SPXS?
It is very similar. I believe it is a 3 times leveraged index. So you can see that the Qs are down 1.2%. SQs are up 3.6%. So you can see it's a perfect 3 times leveraged index. So SQs are doing phenomenal right now. If you wanted to bet on SQs, you'd be up big. Yep. The NASDAQ is very growth heavy. And I'm expecting NASDAQ to get hurt really badly. Growth stocks are going to be in some pain. It's got a lot of distance to fall as well. I am expecting a COVID style capitulation where it crashes as hard as this did. And NASDAQ is way overbought. Even today, 2 years later, it's still way overbought after all of this downside and the bear market.
We got Daniel Loxton asking in the YouTube chat, is Bior still a thing? I bet we might have a few words about Bior.
I'm sure that we can talk about Bior. There's plenty to talk about with Bior.
Especially right now.
Yeah. Let's go talk
Did you
about
say meow?
Meow. Right, meow. There was somebody who was bugging me nonstop about PSNY, so I'm going to go ahead and keep my promise about that really quickly. Oh God. Oh God. Polestar Automotive Holdings. Motor vehicles. Their float is not reported. A massive loss on their income. They finally reported a positive income recently. Technicals are, I agree, the technicals are awful. There's no analyst recommendations on it. I would just I would not, I wouldn't touch it, honestly. It looks, one, volatile, two, bearish, bad combination. If you wanted to take a short on it, you could do that. But I don't like this choppiness. It's very unpredictable. I don't even know what's going on with this company. Without something fundamental, especially if this is a new company, like a growth company, I would stay away from it. It's traded on NASDAQ. Growth stocks like this, doing what they're doing right now, is not a good look. Okay, so Biora. Nice. Okay, so Biora is trading just outside of that falling wedge that I had been drawing on this for a while. It is looking nice and strong. I want to see this consolidation continue. This consolidation is good. That contraction of price between 65 or 70 cents and 75 cents is a good thing. This is lowering the volatility. It is consolidating. The bulls are consolidating their shares and their gains. And we've already dipped into this demand zone one time. This was a liquidity pool, and I had seen this happening ahead of time, and then we caught the run back up. Very nice for Biora. I might expect it to drop one more time and touch these liquidity pools, but it may not necessarily do that. But it is possible. There's potential there. If it drops one more time, I would expect it to be a very sudden, like, feel your stomach fall out of your chest type drop, and then for it to recover quickly. So look for those deep wicking candles on this one and set an alert, have it ready to go. That's an opportunity to average down if you see that. So I will go ahead and set an alert on that because that's something that I am prepared for and anticipating. You can set fills all the way down to 55 cents. It can drop that far on that kind of volatility. It can do it. So if you see this thing drop down suddenly to those levels, just, know that I said that it was coming. It's possible. See GMVD. GMVD is consolidating nicely. This is an interesting tweezer top formation, though. On the daily, that's a bit strange. Don't see that every day. Okay, the 1.8 million FTDs, they're probably already covered with them driving the price all the way down to this level. They probably already located those shares for borrowing. Let's go and check my theory and see if Ortex shows that it's already been paid for, or at least covered with borrowed stock. I'm sure Hoop Money's covering this one pretty closely, but I will take a look at it for you guys. I see a big buy or a sell wall on the ask. Caught that. Not that big, I guess. It's only 5,000 shares. Okay, so we're seeing the short interest at 3.7%. Watch the on loan. Okay, so they haven't taken the loans out yet. I said back here to expect that utilization would max out at 100 and that the on loans will suddenly skyrocket. So we're still a few days away from that. But let's see what happens after these. Let's see what happens and see if these FTD prints actually happen. I'm not worried about days to cover. I'm not worried about. I'm not so worried about failures to deliver, although there was a pretty big spike in them not too long ago. This thing is not on the threshold list, so right now the FTDs are still stacking up at the moment. But the cost to borrow is rising. If retail keeps on buying GMVD and forcing market makers to provide liquidity through short exempts, then you'll see this go up over time, and it will continue. Let me go check some work messages and make sure that I'm not missing anybody at work. Okay, nope, 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 not my problem. Okay, looks good. Cool. All right, so I am all caught up there. We're not looking at PSNY. I'm gonna stay far from that thing. I'm not gonna touch that. Sorry, guy. It's nothing against your play, but it looks way too sketch for me. The volatility, I don't like it. AMC is still taking a bit of a beating, as I recall. Let's go catch up with AMC. I had marked out a position for AbbVie, by the way. It had a big run yesterday. That was a good time to cash out on some of those.
1 minute.
Oh, yep, that's right. 1 minute on the market. What do you guys want to watch?
I mean, I just wanted to let everybody know in case they had something they need to close out.
TD, what are your thoughts on, like, for example, I'm looking at my portfolio, right? And then I see it just steadily increasing, but the tickers that I'm heavily involved in are barely even moving. I would say they're getting juiced up, but what are your thoughts on that? Like, how does it work? Where do they get that from?
Where they get what from? Ding, ding, ding. By the way,
Like, where do they get the data from that makes it get juiced up? Like, for example, if your calls are getting juiced up and your charts are barely moving, like, why is it that it's going up, and where are they getting the information from that's making it go up? Like, are they anticipating that it's going to come up?
If you're talking about the spread, is that what you're referring to?
I guess you could say just in general, like, like I'm heavy in Bed Bath and Beyond, Rev, I got a couple other ones, but I'm looking at my portfolio and it just kept creeping up, and creeping up, but it wasn't anything moving. And like it went up almost 8%, and charts barely moved.
That sounds like somebody was accumulating calls and hitting the ask on the call side. That usually indicates that somebody is preparing to move the market. So if you see that kind of activity, whatever direction you see the ask being raised, or if you see the bid lowering repeatedly, that tends to indicate that predicates a move in that direction, because that means that they are hitting those options repeatedly. Like they're either hitting buys over and over and over and over again, or they're hitting sells over and over and over again. So if the ask is rising repeatedly, but the bid's not moving, and the charts aren't moving, that predicates a move in that direction. So you could try to get a fill at that asking price and try to scoop some of those options. That's one way to trade.
So they are anticipating a move. That's why it changes whenever the chart's not even moving.
Yeah, that's what Unusual Whales helps with. Unusual Whales will kind of help you predict those big swings. All right, let's go ahead and catch up with the market and see what happened at close. It looks like SPY had a sideways day, but I am very bearish on SPY. Things are super sketch right now, and pretty soon we're going to have a CPI report. I'm expecting news to be pretty negative overall going into next week after 4th of July weekend. And I am also expecting that the CPI prints in August, which will include the inflation numbers after 4th of July, I'm expecting some huge problems, and for the inflation prints in August to be particularly bad. I am also anticipating that real estate data for July is going to be extremely bad. And finally, I'm expecting delinquency rates to get reported at a higher print than before. Let's see, delinquency on all commercial loans and banks. This is Federal Reserve data, by the way. Right now, the delinquency rate is at the lowest point that it's ever been at. Not gonna look at these technical patterns. They don't need to be shown here. This is irrelevant. But this is the delinquency data. As you can see, in 2007, the delinquency rates were pretty low at 1.7, but that was rising against its all-time lows back in 2006 when everybody was starting to buy their houses. A year later, it started to get out of hand, and then by July of 07, the delinquency rates had hit more than 2%, and defaults on mortgages were up to 8%. And when that happened, it did cause a massive panic in the housing market, but it didn't affect the stock market right away, and it didn't affect the bonds for mortgage-backed securities the same way. So the bonds were going worthless, but the market had much farther to fall, and the delinquency rates just skyrocketed from there. So I'm looking for the delinquency rates to pop to 2%, at least to 175, but I'm expecting it to be higher. And that is an anomaly because my biggest fear right now is that they're going to be underreported and that delinquencies will be artificially low because of forbearance. But I've been watching the data, and I've seen a lot of people coming out of forbearance in the red, and they are owing more than they started with, and they didn't get ahead of their loans. And what I'm expecting to happen is for foreclosures to fall very close. They're going to follow close behind, and that's going to hurt everything in the market, but it's obviously going to hit real estate the worst.
Just a quick note on the forbearance, something I ran into personally whenever I was buying my home. The people I was buying it from did not realize that the forbearance doesn't just move a payment to the end. It essentially creates a whole separate loan that's growing interest on its own, like to the side of your actual mortgage.
Yeah.
And the government does not make it easy to even pay that thing back. They hide it so deep, and
Yep.
the phone numbers and the department's understaffed. So it'll be a cascade of shit.
Yeah, and it's going to go to the courts as well, which is going to slow things down even more. What's eventually going to happen is you're going to have a liquidity crisis at the banks, which are trying to push through a whole bunch of foreclosures at the same time, which is going to back up the courts, and those are going to be they're going to be so far behind. Banks are going to have a liquidity crisis where they can't foreclose on homes, they can't collect their money, they can't get any of their interest rate payments, they can't pay out to their clients. Everybody's going to be pinched, and then the banks are going to start losing money from people pulling it and withdrawing from their accounts. When that shit starts happening, you're talking about full-blown 1929 style run on the banks with liquidity drying up where the banks have no cash to give out. There's no more withdrawals. If that starts happening, it will echo all of the same terror that hit the markets back in 1929. I'm praying that I'm actually wrong about this. I would rather be wrong. This is much worse in the long run for everybody else because, I'm affected by the world around me. I'm affected by the economy around me. Even if I'm betting on the collapse of the entire market, I don't want to be right about that. I'm not happy about that because that's going to mean that life gets so much harder for me too, even if I have money. I would rather be wrong about that and for my long plays and everything else to just work out. But if I am right, then I would much rather be in a position where I have enough capital to survive in this high inflation environment and have options. As long as you have cash during these ridiculously crazy times, you will have options. You don't want to be the person that's upside down on their mortgage with no cash left in their savings account and a whole bunch of consumer credit card debt that's just it's being held over your head like the sword of Damocles. It's just not something you want to go through. What is this? NASDAQ 100 finishes first half of the year down 30%, most since 2002. Wow. .com style crash of the NASDAQ. That's a lot. Oh man. Let's go look at the history of that so that everybody understands the implications. I want to actually show that. Down 30%. Yep. Okay, so y'all see this. You see this downtrend. Let's go ahead and get rid of all this and all this and all this. All this garbage. Let's go look. All right, you see this fall, right? The NASDAQ is down 30% on the quarter, or on half the year. This is the worst move since 2002, according to Bloomberg. I gotta go look at. I gotta look at the NASDAQ 100 to get this. Here we go. All right, so that drop. That's 2020 drop. This was 2008. October 2008 dropped 40% in a quarter. And this was .com. September of 2000 to April of 01 dropped 66% from the peak of the .com. And this was the peak. March of 2000. God, get out of my way, TradingView. March of 2000 to April 2000, it fell 30%. That's the same size and speed of the move that we just went through. Well, actually, this one was a bit faster, but down 37% about halfway through the year in 2000, from March to October, and then October signaled the real crash of everything. It went down for the rest of the year, and then into the first quarter of next year, when it hit the near the bottom, down 61% in April of 01. And it just kept going. This what they're referring to specifically was the start of the year in the start of the year till the end of June in 2002. This was the move that it did. It was down 40% in half a year. So thanks ATLUTD fan.
Atlanta United.
Atlanta United. Gotcha. Hey, dips and rips. XLRE puts climbing double after hours is probably just because of the bid and the ask spread. Don't put too much stock into that. I had the same thing happen to me where my XLRE puts after hours were showing a bid of 0 and the ask was like 40% higher. So it's just the spread is getting screwed up because it's an ETF trading an options chain, but it's not traded after hours. So don't worry about that. It's just a printing error because the options market closes. Man, oh wow. The puts printing everywhere is somebody really thinks that the market is done falling right now. Oh, you know what? That sell at 430, that sell at 430 strike for I'll show everybody this on I'll show everybody this on stream what we're looking at. This is from our options fanbot, which prints the flow on Big Flow for the exchanges. What we're referring to is this giant print here for the $430 strike on the SPY expiring on September 16th. I have a feeling that somebody sold puts that they bought, and that's why this is on the bid side, and they hit the bid immediately, like spot on. That's probably somebody that was just hitting the bid to close out their position, but they're already deeply in profit. And that same time, you saw these December prints. The December 16th are for 370 strike for $165 at the lean ask. So they got filled just below the ask, and those puts don't expire until mid-December. So this was the same trader, whoever this was. It was the same person. They sold out of their puts here that I imagine they made some stupid profit on, and then they rolled out to December in order to take the next leg of their trade. And then you also have these trades, these 4 trades here, or these 3 trades here, printed at the same time. You saw a lean bid on puts for 364 here and here, and there was a lean ask for 8.5 million here. So these 3 trades, I suspect, are the same trader. It's very interesting. That was a big trade. But there's a lot of puts being swapped out. There's a lot of calls being sold. I think that this may have been the last day before total market capitulation. Things are getting really spooky. On the upside, for those of you who are in meme stocks and who are trying to play these squeeze plays, there's some hope for you. The reason why is, ironically, whenever the market tanks and absolutely takes a dump on everybody on Wall Street who thinks they're oh so smart and pours all their money into blue chip stocks that are bleeding to death, what ends up happening occasionally in those environments is that the pain is so great that it causes margin on those blue chip stocks to drop significantly. And you might ask, well, how does that help meme stocks at all? Directly, it doesn't. But what you have to remind yourself is that short bets, short traders that they sell stock short, they have to have a margin account, and that margin has to be posted against something with intrinsic value. Typically, it's the equity of their number 1 stocks. So if their account is leveraged against, we'll just say Google, just to name a random company, they have a bunch of stock in Google, and then all of a sudden they say that let's pick a crowd favorite, AMC. They hate AMC for whatever reason. They're long on Google and they hate AMC. Maybe because Google's creating a streaming service and they don't want AMC to compete, whatever. They think movie theaters are going to a penny, whatever dumbass thesis they have, fine, whatever. But they're short AMC and they're long on Google. Now, what can happen is Google stock is taking a beating for whatever reason, and they have all their equity in Google. Now, AMC is trending with the market at this time, but Google, as you can see, fell from $2,870 down to a low point of $2,100, just about. Now, that's a huge drop in equity. So if they had one share of Google, then they had their margin shrink by $800 almost, $700. So if their margin shrinks by enough cash, then that reduces the equity value of their account that their short bet is held against as collateral. Because whenever you take a short bet, you're having to borrow a stock, and you're going to have to pay that back at some point. So if AMC goes up while Google is going down, those inverse each other. And you have a situation where Google, which we will draw in, how can I change the color of this? I guess I can't. Well, Google is going down, right? And if Google continues to go down like that, but AMC starts to go up like this, then you can have a situation where the person who is short Google no longer has enough cash or equity in their account to hold their short position. And the broker can say, hey, you don't have enough cash in your account to act as collateral. So what happens is they are forced to either make a choice. They can either sell their Google position and take the cash out and hold that cash as collateral against their short position, or they can buy an AMC stock in order to close their short position, which causes AMC stock to go up just a little bit. Now, if enough people are in this situation, if enough shorts are in that situation where you have stocks like Apple and Google and Facebook or Meta, whatever it's called, and Amazon and JP Morgan Chase and all the banks, everybody is bleeding, but meme stocks are just kind of holding their normal level, then all of these guys that are short on these meme stocks are going to be put in a vice, hence squeeze, where they have to choose to either liquidate their long positions or they have to liquidate their short positions. And that choice is forced on them by the broker. They either post more cash, add it to their account, or they close positions. And that decision is made. They only have a few days to make that choice. And if that starts happening across the market, where you see all these big blue chip stocks falling rapidly, then you can see penny stocks and meme stocks squeezing crazy amounts all over the market, and it can be quite a dramatic event. Things like BBIG could squeeze, and Excella, and Revlon, and Weber, and Sky H, and AMC, and GameStop, and Bed Bath and Beyond. God, how long is the list? Let me go actually read off all of the short plays that I've been watching. ATER, ALZN, BKKT, DraftKings. There's IDEX was pretty heavily shorted. Neo Motor Vehicles, MMAT, Mavis. There's all kinds of stocks that are way heavily shorted that are traded on the Russell 1, 2, and 3,000 indexes that are extremely heavily short, and especially in the retail sector. XRT index. All of these stocks have the potential to have that just that one fund that was super short on them decide, like, you know what? Screw it. I'm selling. I'm buying the stock and closing my short position, and it causes the price to move up, and then three other guys that were short on it are suddenly deep underwater, and then they panic, and then they buy to close their positions, and they cover their shorts, and then you get squeezes, and squeezes beget squeezes. Like, for example, Volkswagen during 2008. That was the result. That short squeeze was the result of a whole bunch of people getting liquidated forcefully because it was squeezing itself after Porsche bought the company and they like exhausted the float. There was only like 500,000 shares left in the open market, and everybody was fighting for them. And the forced closures squeezed out so many shorts in Volkswagen that it went to it's like somebody check me on this because the chart doesn't really exist except on like deep historical charts, but it's like $2,000. Volkswagen went from $200 to $2,000 or something crazy like that. It's a matter of being patient and being careful. The main thing not to put yourself in the same position as those shorts is don't take leverage that you can't afford. Trade on cash, not with margin, or at least make sure you have enough cash collateral in your margin account that you can continue trading even if all of your long equities go to zero. And you won't have that problem. And then you can hold on to your long positions in AMC or GameStop or whatever you like. But the guys on Wall Street that have to take those bets and have to play risky and have to, constantly be making money in order to meet their obligations to their clients, they're under a lot of pressure. And yeah, I think they're getting ready to crack. So that's my 2 cents. SPY seems to be doing some big spikes in after hours. We've seen these spikes before. These tend to indicate a massive move preparing to happen in the opposite direction in SPY. So this big wicking candle here, this bull hammer, normally this is a bullish signal, but we've noticed when it happens in after hours on the SPY, it tends to signal and move to the opposite direction the next day. So we'll see, but it's been a consistent signal for us for whatever reason. Imperial Petroleum is selling off still, but it's back at support and getting ready to test a liquidity pool. I'm going to go ahead and place a alert on this for everybody, and we'll just go ahead and track that. Oil's continuously going up in price, so I have no idea why Imperial Petroleum is trading down. That makes no sense. It's inverse to the rest of the oil market.
I think there was news out about it. Hold on, I'll go look. No, I can't find anything. I thought there was. I thought I remember hearing something about a news this morning on it.
Well, let me see. 5 days ago, Imperial Petroleum got a notice of noncompliance from NASDAQ. I'm not really worried about that. That's probably what caused it to drop suddenly, but like that's not a big deal. Like they only just got into noncompliance. They only have to get back above $1 for 10 days. This sell-off seems so weird. They just bought 2 new tankers. Like and they're in the perfect location. They're in Greece. They can provide all the oil moving to Europe through the pipelines if the pipelines in Ukraine get damaged during the conflict. That's all it's going to take. Like seriously, if those pipelines in Ukraine get damaged at all, if they have to close them, if they get damaged, if they get blown up, whatever happens, IMPP will just explode in price, because the only way to get that oil out of the Black Sea and the Caspian is to take it by sea via tankers. It's the only route to Europe. It's Russia's only route to Europe, and it goes straight through Ukraine. As a matter of fact, all the other pipelines that are going through Africa and the Middle East to Europe also converge in Ukraine. So it will cause an oil supply crisis to the West. It will cause Europe to go through a major oil crisis if those pipelines in Ukraine get damaged. You read in the if you I swear, like you read it, you read in the news, Ukraine oil pipeline blows up. Watch oil just go just through the ceiling. It'll go crazy. I normally don't exaggerate this like this, but that's what will happen. Let's see what else we've got. I want to go ahead and review all of my positions. The entire SPY's top 10 is red, which is not a good sign. The SQs are up 3.8%, very nice close. SPXS up 2.5% almost. SPY is down 0.8%. Redbox up almost 9%. Redbox did really well today. I hardly even noticed. Let me actually get Weber on here. I forgot to put Weber on my.
Bend. We had some volume and a start to the bend.
Oh, look at Enjoy. Oh, look at it go. Back up to 22.8, 22.9 cents. Nice call out. That's awesome. If you got in, who called out Enjoy? Who called it out? It was
that was me.
Insano, that was you?
Insano.
Awesome, dude. Hey, if y'all got a long position in ENJY, the ticker symbol that had the bankruptcy, the Chapter 11 bankruptcy notice, and you make money on this, all of y'all just you owe Captain Insano a beer. Everybody just throw the dancing demons in the chat. Oh, Tom Sawyer, I'm so sorry. I missed your sticker. I appreciate the $5, homie. Thank you so much. I'm sorry. I was reading through my filings and I had it on the same browser for my chat. I'm sorry. Thank you guys.
It's all right, buddy. It's just general disarray.
It's just all chaos up in here. Kramer tweeted? What the hell did Kramer say? Joe Miami, thank you for the $5, dude. In my opinion, NASDAQ's going to possibly 7,000. Many companies will go bankrupt as interest rates hike. They have way too much debt on their balance sheets. I really have to agree with you, dude. I'm sketched out by what's sitting on NASDAQ right now. The number of growth companies and zombie companies in the NASDAQ is dangerous. There's way too many companies that are just taking out restructured debt, and that's over. That's over now. There's no more like we can just pay debt with other debt. That's not happening anymore. Those times are over. The interest rates are only going up from here. Anybody that hasn't gotten refinanced and started paying off their debts now is going to start losing money hand over fist. That's why I was long on Accela, because they restructured their debt and they deferred it to long term and they got a really good interest rate on it. And I'm shocked. I am so shocked they got such a good deal on it, with the interest rates being like at 5.8% right now, the federal funds rate. I am so shocked. They must have a really good position and good credit to have qualified for that good of an interest rate. And that's part of what convinced me that Accela was in better shape than what was being implied by just the profit margins. They got a really good deal on their debt, and they got it from PNC Bank, and that bank is strict. Like, they have very strict lending, so they had to have gotten really good credit in order to qualify for that. That was an excellent sign. Man, I like seeing Enjoy Tech. That looks really healthy.
Did you see Michael Burry? I tagged you in the tweet and trading floor text.
Oh yeah, I did.
He said he thinks we're only like halfway there.
Yeah, I agree with him. It's funny. I was looking at I was watching some other YouTuber that did like a compilation of all of Michael J. Burry's tweets. Dr. Burry, by the way, if you don't know that name, he was the famous Big Short that went short in the housing market. He predicted it in 2005 when the housing market was going to collapse. He was exactly right. It was going to crash starting in July. He literally called it the summer of 2007 was when the crash was going to happen, and he completely perfectly timed it. But it took him until mid 2008 to get actually paid by the banks because of how insolvent they were. But anyway, yeah, he accurately called the dot-com crash, the 2008 subprime crash, and now he's calling the inflation crash here. And this is going to be a combination dot-com housing crash with with 2000 or with 1970s style inflation going out of control at the same fucking time. We're in some serious deep shit right now. We are in serious deep shit. Demonetized. Flintster, congratulations on the jump in your XLRE puts. Just know that the spread on XLRE gets weird after hours, so that may not be there tomorrow when you look at it. Don't be upset if that happens. My XLRE puts jump around like crazy all the time. It happens. Just want to give you that heads up just in case. SPXS is so strong, man. That was a good call. Very happy with that. Revlon. Let's catch up with Revlon. Up $125 on my paper trade. I should be doing more of the paper trades for all of these stocks actually, because I would like to show more of these. Tell you what, I like what Biora is doing, but I am expecting a liquidity hunt. So I'm going to go ahead and throw this down here. I'm going to go see if I can enter into a paper trade with Biora. We're going to go see if we can set a level here at this liquidity level. We're going to set our stop loss down here below all of these. But actually, I'm not even going to trade a stop loss. I'm not even going to bother trading a stop loss. Because if it goes down to that level, then on my... This is just a paper count, again. Just letting everybody know. I'm only trading on a paper count. And I would trade this to 105. So we'll make that a limit order. Paper trade. Do. Limit, no stop loss.
Is there... Casual Fool just brought up a good question. Do we need a bankruptcy bot now? Like, is there a way? Is there someone that, like...
Flabbergang
holds all the filings for Chapter 11?
The Devil Stockbroker's Basement Monkey. Where's Flabbergang? Is that something that we can do? Can we track bankruptcy reports?
Let me see.
I love it when he says that and just disappears and then comes back with answers.
It will be hilarious if he's just like, let me see, and then comes back, okay, it's been implemented, and then he just releases a new update to the bot.
Command.
Here's the command, dropping it in the trading floor. For those of you who are listening in on YouTube that aren't hanging out in the trading floor that know, we have our Scourge bot, which tells it gives us alerts on basically everything. It lets us know if about news and volatility halts, FDA approvals and denial news, Consumer Protection Agency reports, and product recall reports. And what else is there? There's more. There's more things that it reports on.
Do we have a dilution feature in there too?
A dilution featured? No, I haven't actually seen that. Oh, we've got ETF sentiment reports. We have unusual options flow triggers, and we also have interactive brokers data refreshes on lendable shares. So that tells us the lendable or utilizable shares for interactive brokers for shorts. So all of that is free with the Discord. It is automatically reported to any member who is a veteran or above. The Discord itself, we have a $3 membership minimum for people who want to get in just to keep out spam and bot scammers, which is still a problem. Like we literally get bot attacks all the time. People pay the $3 as it is and just swarm our Discord with bots. I'm actually trying to figure out what we're going to do about that. But we've been doing a good job at catching them quickly and keeping them out, and then that just costs them money. So, BBIG and Tide. Yeah, we can talk about that. I'll take a look at these. So, BBIG, I'm just saying, like, there's a lot of weird stuff going on with the options market, and I think the brokers are screwing with it. We were discussing this in the trading floor quite a bit today, and it's something to at least just be aware of. But the current the current setup for BBIG is kind of tenable. I think that BBIG is currently at support, and in terms of its technicals, like it still is in a good place to make a move to the upside. On the hourly, you see we've had repeated bullish divergences occurring on the chart, and it's happened here before large moves to the upside. The other thing that I'm looking at is that BBIG is at the same support that it's been at before literally every other squeeze that it's had. Every single time that BBIG is squeezed, it broke through $2 and then just went bananas to the upside. So if you are long on BBIG, just know that you're at that level where there's huge demand from buyers. And this tends to be where the institutions take the price to before they send it ripping in the other direction. So don't give up just yet. Don't get too down on yourselves, and try not to panic right now. Patience is rewarded for stocks like this. BBIG has been selling off for a long time, and I know people are really tired and exhausted. And the options fuckery is just one more added piece of fear to really screw people over. The brokers still have to mark your positions, and they are obligated to award you any positions, especially if you choose to exercise. You get your shares. So just try not to panic right now. BBIG is going through a major upheaval between its spin-off dividend with Cryptide, and it's going to get fixed within a couple of days. Just be patient, wait for it to play out. Don't let the major sell-off freak you out, because this is exactly what market makers and institutions do. They know how to prey on your psychology and trick people into selling exactly before they make their move. That's what they're trying to do. They're trying to take out people who are weak longs on the stock. This big dip here is it, for all we know, and I'm not saying that you should just go ahead and bet everything on it, okay? Don't do that. Don't be crazy. But if you are long on BBIG anyway, and you're strongly convinced that this stock can increase in value, and I do see the case for that. I acknowledge that BBIG is at least a profitable company, even if I think that their executive board are a bunch of selfish, greedy fucks. They could still take the company's stock to a higher level, even if I think they're dirtbags. And I'm not being a revenge trader, in that I acknowledge that they're shit people that honestly don't give a damn about their retail investors. But I recognize that the banks, the institutions, they want all those shares, that if this company is going to go crazy in its price, They're going to try to make retail their bag holders. They're going to try and steal shares from retail by preying on your psychology. So don't fall into that pattern and take advantage of those discounts in the price when they're available. So right now, BBIG is at the lowest price it's been at. It broke through 5 liquidity pool levels that I had marked out. One large one, 2, 3, 4, 5 smaller ones. And that is this big spike down is what I talk about when I'm talking about liquidity hunts. You can see it on, look at it on the 10-minute time frame. Big spike down. It only took an hour from open. It hit its bottom within an hour, and then what do I say? Look for 10 candles. If it recovers its support within 10 candles, in this case, the 20 moving average on the 10-minute is your support. If it reclaims support within 10 candles, then it's a sign of bullish upside. So 1, 2, 3, 4, 5, 6, 7, 8, 9, done. Got it in the 9th candle. Okay, you had to move to the downside, and then one more big engulfing candle here. This is your final confirmation. So the price is down right now. This is actually a good time to buy the dip if you choose. If you want to get more shares, if you like the price of BBIG now, if you were willing to buy it at $2, why wouldn't you buy it at $1.37? I'm not just saying that just because I'm buying the stock. This is how I trade. I look for liquidity pools to get broken into. This is where institutions try to break the week long's will, and then they take the price back up to the upside really quickly to knock out anybody who took a short position, take their money, and then they take the price back down and keep collecting more shares. And they'll do this 2 or 3 more times before they finally send the price ripping to the direction that they want it to go in. Since this is the big move, this was the big move that drove the price down, this is the move that is telling you they ripped it to the downside to knock out the longs and then took it back up to the upside and recaptured support. This is your sign. This is your sign of the direction they're going. They're going long. Okay? So that's my liquidity pool. That's my liquidity pool level. And now I can actually show you how I would trade a liquidity hunt. Because we're in after hours. I can't get filled because of the paper trade, but I can't get filled because my paper trading account doesn't let you. But what I can do is I can show you how I would trade it. I go ahead and put my stop loss below the candle, just below the stop loss hunt candle. And now I'm going to go ahead and set myself up for this next big liquidity pool. And that'll put me at a 5-to-1 risk to reward ratio. Okay? So I can't get filled on this because my paper trading thing won't let me get filled during after hours, which seems really stupid, but whatever. I'll go ahead and do I'll do a 3% risk on the account. Get filled at the ask. Time and force. Good till whenever. And I don't think it'll let me get filled in after hours, but we'll see. Oh, it does. Oh, is that how you get filled? You just do. Oh, wow. I'm stupid. Okay, so I did get filled. Wait a second. No, I didn't. I didn't get filled. Well, fuck it. Whatever. Well, screw it. But anyway. If it opens low tomorrow, then it'll get filled, and I'll have my stop loss marked out. So that's fine. It's fine. It's fine. Whatever. Trading view. It's fine. Does anybody else have any other questions on liquidity hunting or liquidity pools? I enjoy talking about this stuff, so please.
PD.
Yeah, what's up?
I'm adding a bankruptcy monitor as we speak.
Oh my god. Can I get some dancing demons in the YouTube chat, please? We're getting a bankruptcy notification monitor for the Discourage bot just right now. Flabbergate, were you listening when we were saying like he's just going to disappear for 5 minutes and then come back and then tell us it's already implemented? Were you listening?
Yeah.
You know that we all love you very much, right?
Oh, that's awesome.
Except when I'm trolling you on the chat, but yeah.
Then you're banned.
The
We
trolling
love you.
sucks.
We love you here, but don't get banned from YouTube.
Let me catch up with the YouTube chat because I've been paying more attention to Discord chat. I'm sorry, guys. I'm sorry to have been neglecting you. Is PSNY good to hold through this market meltdown? I don't know, dude. I looked at it briefly today and it looks sketchy as hell to me. I would say not to touch it. It's at support right now, so it could bounce, but I don't know really anything about the company. As I recall, it was Cars, right? Cars. My opinion is that unless they're in the auctions market and taking people's cars on repo, it's not a good it's not a good industry to be in. IMPP diluted too many shares. I guess that's a valid opinion.
Wait, is there a company that does that? That does the car repo, like that specializes in it?
Well, apparently Carvana does now. Carvana is actually one of those companies. They bought an auction company. I'm trying to remember what their name was, but Carvana is doing higher lows right now and setting up support. And yeah, I think that Carvana could be one of those if it survives. Carvana has to survive this downturn, but the repo market is exploding right now, and a lot of people are losing their cars that held them out on title loans. It's not a good situation.
Todd just said in the chat, TD, that we're going to regret having the bankruptcy alert when the crash hits.
Oh my God, yeah, you're probably right about that, but
Phone gonna blow up.
It's gonna be like fireworks.
yeah, oh man, that'll be exploding all over the place. Oh, I'm not looking forward to that day. Mr. Head, I think that person also asked you about Tide. Are your thoughts to hold that stock also? Do you feel it will do the same thing as what you talked about for BBIG? I would consider Tide and BBIG to be separate stocks because they are going to be segmented companies. Obviously, BBIG holds all of the equity on the company, so they're the owners of it, air quote. But the thing is that you have to treat them separately because they're in separate markets. BBIG is controlling. It is a mix of crypto, but mostly social media with their low motif control. And the NFT market is not doing well right now. So NFTs are pretty speculative. And right now, the speculative market, stocks, crypto, everything is just crashing. So honestly, NFTs are probably not a great place to be at the moment. But that just depends on your outlook. Don't let me talk you out of investing in something if you've done your own research. I don't particularly go for NFTs. I've never bought it or minted an NFT in my life, and I don't care to. It's just not my thing. I can see their uses, and I can see how art, paying for digital art or trading digital art and having, the rights or the air quote ownership is attractive to people and collectors. But I also treat it the same way as Beanie Babies. And that's kind of the way I look at it. And that's just me. A lot of people have a very different opinion about it. So if you like NFTs and if you know more about the NFT market than I do, then trust your own research. Don't just listen to me. If it was me, I would not hold Tide. I would turn it around and sell it if I saw it had a good deal. But I'm, I got my B big, and that's it. And if once this squeeze is over with, it'll be gone, and that's the end of it. I am playing it for the squeeze. What else do we have? MSPR, can you take a look? I was actually looking at MSPR last night. I know a little bit about the company. They're MSP Recovery Inc. They were part of a SPAC from Lionheart Acquisitions, and it looks like they're sold off. I was very interested. I see that it's sold off really badly on the reverse merger. I'm looking for this consolidation to continue and then to see what happens. But I'm actually long on this market because I feel that right now there's going to be a lot of consumer debt, especially in the healthcare space, it's going to turn into bad debt, and it's going to be turned over to recovery agencies that are going to end up buying and pursuing that debt. And this is a company that is already owned by a healthcare service provider. So that was the purpose of the reverse merger, or I think it was a regular merger, but whatever it is. The point is that MSPR went public through a SPAC, sold off badly, and I don't think that was the right move. Like, the investors that let go of their shares here, I think they made a mistake. This one could turn around very quickly. I have a feeling that the loan servicing and loan recovery market might do very well. And I personally think that it's a really shady business, and I don't agree with it ethically speaking. So it's kind of like I have mixed feelings about it. But in the end, like, it's not going to help. My buying any shares of this isn't going to help the company. They've already got their established investors. So no amount of day trading in this stock that I do is going to affect this company. Not really, anyway. But I do see possibilities here. So I am watching it. Hey. Oh man. Yeah, I'm sorry, guys. I'm sorry that you guys got screwed with Tide. I'm just saying to hang on, don't sell it right away, because right now there's a lot of games being played, and I do have a feeling that a good portion of that is just manipulation by brokers and the market makers. It doesn't mean that it's going to just tank and keep tanking. And if it does just keep tanking, well, it was something that we were prepared for anyway. We knew that it was a very distinct possibility. If you entered the trade knowing that, then you would be justifiably angry, just like I am angry. But if they are trying to play games in order to whipsaw the retailers out and then take the stock in the other direction, then you may be surprised at what occurs before July 15th. So don't give up too quickly. All right? Just don't give up too quickly.
When are the CPI numbers coming out?
CPI numbers are, let me go check the calendar. Let's see, CPI. Apparently it's not listed on the calendar here, here we go. Inflation rate, July 13th. So July 13th, the core inflation rate is going to be reported. And that will be printed at 8:30 in the morning Eastern Standard Time. That will be a day. A very scary day in which all things with money burn to cinders. I know I sound so gloom and doom and bearish, but like I'm concerned. I'm very concerned. Hey TD, what's going on with SST? Stock keeps falling, but the OBV is steady and CTB has been consistently high for a while. SST was called out to me a long time ago. I day traded it back when it went through a big squeeze, and I did make a little bit of money on it, but I didn't trade it for this entire period because I saw they ripped the price down and were regaining control of it. So I knew they were going to send those options out of the money. Right now, it's still consolidating to the downside. What I would suggest doing is draw yourself a channel and keep an eye on it. Set some alerts and wait for the stock to finally show strength enough to break this channel and for the daily moving averages to cross. Now, this is going to cross to the downside right now, so it's going to be a bearish outlook. SSST is honestly, you're basically handing over your money to a market maker at the moment, or an institution that is long on this company. They are dragging the price down, and I don't know what happened here that drove the price to these highs, but something happened. I don't know if it was a short squeeze or if it was just pure euphoria because of the earnings, but whatever the case is, let this thing consolidate down. Don't chase the price. Give it time. Wait for them to bring it down to a price before they start to show strength. When it starts showing strength, you'll know it. It'll curve down and break back around, and it'll recover past. You see these U bends? They break down right away, right? Every time there's a U, it breaks down right away. So they're just collecting liquidity, and they're screwing people over. As soon as people buy on these dips, they just hit it again, and they're just doing it over and over again. So don't play into their hands. Just stay out of it. Just wait the market out. If you see it collapsing, maybe even short it on the way down. Whatever you want to do, I'm not telling you what to do, but at the very least, just hold off. Don't get in a hurry every time you see the price move up like this. Set clear levels and wait for it to break those levels. When it breaks these levels, look for it to consolidate. If it doesn't, hold those levels. And if it doesn't go up further once it breaks them, then it's not a trade. Just wait and be patient. There's other opportunities in the market. If you get in too much of a hurry, you're going to end up making yourself angry because you got in too quickly and they just ripped the rug out from under you again. They're doing this with SST repeatedly, so just let them. If you want, you could do something like selling puts on the way down. That way, you're making a little bit of income while you're collecting shares on the way down. You could sell puts for like $5 or $6 and just wait for those to go in the money. You get assigned, you buy the shares, but you keep the premium. I don't know I don't know if they're just doing monthlies right now, but you might be able to do weeklies and collect a little bit of premium on the side. Look for these bounces when it like bounces the first time, and then sell a put down there and wait for it to rise and then close the put if you want to trade it that way. You can sell cash secured puts for an income stream on these. But my thing would be to wait for this channel. Just let the channel play. Don't rush. Okay? Yeah, the low liquidity market is really easy to control. Skate Power. Thank you for your comment. Buy, hold, and don't get over leveraged. That's exactly right. Paolo Frioni, I appreciate it. My family is Italian. Our heritage is Italian. My grandmother was born in Naples.
Are you my brother?
Kramer tweet: some guy named True Demon doesn't know Jack. Lol. did he really say that? I hope that that's a joke, because if Kramer is maybe if Kramer tweets about me, my portfolio will squeeze. If he says that I don't know what I'm talking about, maybe I know exactly what I'm talking about. Inverse Kramer index for the win. How flattering would it be to be told that you don't know shit by a news head? I think that
an
would just
inverse ETF tracking him to prove that he's wrong more often than right.
I was just thinking that.
It's like when he's right, he's only right a little bit, but when he's wrong, he is holy shit wrong. That's funny. Demonetized. Have I looked at GMVD? Just got back on. Yeah, I covered GMVD quite a while ago. Sorry, I'm so slow with chat, guys. I'm trying to keep up. Volume surge in Excel after market close, close to 40 million shares. What? I didn't see this. When did this happen? When did this happen? It sure did. Holy smokes.
Right after the market closed, someone in YouTube chat posted that.
That's late settlement from a dark pool. That's late settlement. Hey. Hey, guys. That's late settlement.
Anthony Fro posted that in YouTube.
Thank you, Anthony, for that heads up. That's a tombstone candle, but after hours, that doesn't mean much to me. This thing is bouncing off of the low range of the VWAP. That big candle is interesting. How many shares was that? Was that really 40 million? Wow, 36 million. Pretty close. Yep. That's interesting. It was 38 million in the hour. But the fact that that candle printed in a 5-minute candle, that's interesting. That's big news. Okay. Not financial advice at all whatsoever. But these big candles tend to indicate large moves the following day because these are late settled shares. This is probably printed because of a pre-agreed upon price, and this could be the settlement from this move that took place for all we know. Like they could have settled a good portion of their trade in dark pools because dark pool trades need to print to the tape 3 hours after they take place. And if you notice, this move started about here, and exactly 4 hours later is when this candle printed. So I'm willing to bet that they closed a large dark pool trade, and that is getting settled here. I really have a feeling that that is a dark pool print. I don't have dark pool access right now, so I can't check those prints in real time. But we'll work on that. Thank you, Captain Insano, for the news. That's actually interesting. I'd love to cover that. Ernst & Young to pay $100 million penalty for employees cheating on the CPA ethics exams and misleading the investigation. I heard about this the other day, that Ernst & Young is now... They literally had their CPAs cheating on the tests, and now they're having to now they're having to lecture their own ethics committee on ethics, which is just comical.
Celeber actually posted it. That's what that sec.gov link is. I just went to it, took a screenshot.
That's beautiful. If you guys want to see this, this is available. sec.gov/news/press-releases/2022-114. Ernst & Young to pay $100 million in penalties for employees cheating on CPA ethics exams and misleading the investigation. This action involves breach of trust by gatekeepers within the gatekeeper entrusted to audit many of our nation's public companies. It's simply outrageous that the very professionals responsible for catching cheating by clients cheated on an ethics exam of all things, said Gubir Sir S. Gruel, director of the SEC's Enforcement Division. Quote, and it's equally shocking that Ernst & Young hindered our investigation of this misconduct. This action should serve as a clear message that the SEC will not tolerate integrity failures by independent auditors who choose the easier wrong over the harder right. Thank you, sir. And by the way, fuck Ernst & Young. This company is now the auditor for AMC, if I am not mistaken. Or is that still KPMG? Doesn't matter. All the auditors are crooked. Thank you for the Excel dark pool print there, J Ruff. That's it. 115 dark pool print on Excel for $4 million. Not financial advice, but that's the sound of me feverishly hitting my buy button, metaphorically speaking.
Bye. I almost said something that I shouldn't on YouTube. I forgot we were streaming.
I appreciate you restraining yourself. I think that I've said enough cuss words to get demonetized if I'm going to get demonetized at all.
Don't fork and do it.
Don't fork and do it.
Shut the front door.
Okay. So this is also news coming on the BBIG stuff. Thank you, by the way, Logical, for posting this. Thanks for getting back. We understand your feelings, but as previously stated, our clearing firm, Apex, hasn't finished processing these distributions yet. This is why you didn't get the shares. You may kindly allow some time. Thanks for your patience during this time. Sincerely, so-and-so from Evil E-Service Representatives. Wow.
I don't read my reply on out loud, but did you read through what I said?
Yeah, I read through it. That's I share your feelings exactly. That's entirely within your right to be so pissed. And you know what? I agree. The clearing firm Apex clears for so many brokers that are dealing in payment for order flow. All of their orders are being executed by Citadel, like 80% of them at least, and then whatever's left over, they kick over to Virtu. They're all shady. They're all shady as hell. But this giant candle on Excel, this is a dark pool print if I ever saw it. $4 million traded on Excel after hours settlement through a dark pool trade. That's big news. Something is going on. That's a giant fulfillment of retail orders, I bet you. I'm willing to bet you that all the orders that were traded here, let's go ahead and count all this up. Let's get all of this. Let's see. Oh, you know what? 1, 2, 3, 4, 5, 6. T+6 settlement on all of the short exempts that they had created during this time. The volume was 1.3 billion overall over those days, but in this day, it was 650 million trading volume just on that day alone. This volume print is a dark pool trade. I am betting. I will bet money on this that they are clearing a dark pool trade to cover all of the FTDs that were created because of the short exempts that they never located. This is going to have an effect on the price. This is active price suppression. I wonder if I could go back in time to see what the price did after these big prints like this, if they happened before. So here's one. There's a big screaming trade here, and the price went down back below where it started at. There's a late settlement trade right here. It was a market on close order for 236,000. That's probably not it. Let's go back. Let's look at all this. I think the big one will be in March, if at all. But for all we know, there may not be a precedent for this. Here's January. March. Here we go. So a lot of big trades here. T+4 later. There was a big after hours print here for 16.5 million shares. What was the price at? Yeah. Big jump in price 2 days in a row. Big sell off the following day. And a late dark pool settlement print here on the 15th of March. This was after they announced their preferred stock was being added. Ooh, got another one here. This dark pool print. 65.6 million shares. Traded at an average price of about 43 cents. Don't make it easy for them. Something is going on. Some bullshit is going on with Excella. I do want to encourage people to be really careful. Don't bet money that you cannot lose on this thing though, because it's being manipulated. It is, and there is absolutely no guarantee that right is going to win out in this situation. All right. Let's go see what else there is. I saw people asking about BBIG. Oh, wait, we covered BBIG. Was there anything else? Let's go back to the YouTube chat, catch up with everyone. I do apologize that I'm struggling so much to keep up with you. Let me have that. What is the table indicator on the top right of my chart? This is from a indicator called the Arty. This is a indicator that was created for a guy by the name of Arty who runs a YouTube channel called The Moving Average. The indicator is multi-part. It actually is most of the stuff that you're seeing on your screen. If I just have the Arty, what you'll see is there's these moving averages. These are smooth moving averages for a 20 and the 50 moving average, and then the 200 period moving average. I use this to trade the trend, and this is an ATR band estimator that tells you what to set up your long and short position entry points, stop losses, and take profits at. So if you were trading like a day trader, say like on the Forex market, you would use this to give you an idea of how to trade the stock on according to ATR bands. I don't really use ATR bands because that's too frequent of trading for me. But people that scalp constantly on like the 1 minute, the 5 minute, and the 15 minute, they would use ATR bands pretty frequently. It's a popular way to trade. Excella sold almost 150,000 at $7. What? 4 Element Studios. If you have some more information on that, I'm not sure what you mean. Hey, Brandon. The Scourge bot is available in the trading floor. It's only available to professional members, but you can ask anybody in the trading floor to run a request for you, and everybody, we can share it all the time. It's available as a / command in Discord. If you just create a ticket or if you just ask around in the trading floor, someone can help you out. Snookeroo, every 5 or 6 years, Ernst & Young is always doing dirty. Yeah, you're not wrong. All of these auditors are sketch as hell. Hey TD, are you planning on speaking with Excella? I believe you mentioned they return your email. Yes, I am trying to get in touch with them. I'll hopefully get on the phone with their IR desk at some point today. I gotta make some calls. ABRN. I'll check it out in a minute. Let me catch up with chat. ABRN. Just go ahead and set that up over here to check out later. BRN. Interesting. ARBN. I don't think that you spelled that ticker right, my dude, Manuel. If you want to just go ahead and let me know what it was, because I'm not getting a ticker for that one. Let's see. Market is one big delusion when it comes to penny stocks and over-the-counter takers. It's hard to disagree with you. TRKA. I've been hearing people begging me to look at TRKA for a while. What is up with Troika Media Group? What is this? It's another penny stock. I don't want to become the penny stock guy. I've traded too many penny stocks lately. It's risky. All right. So on the 1 hour time frame, it's crossing below the 200 moving average, which is not good. Let's look at this on the daily and see what's up. All right, yeah, it's been selling off pretty badly. IPO'd at $2.83. Pretty.
Also, if you look,
what's up?
The daily on that, it just broke down out of a channel that was going up.
Yeah, it was setting up with a pennant and then it broke down. That's an inverse island. I don't like it, honestly. It looks bearish in the short term. I don't know anything about the company for the most part, though. So if there's other fundamental factors that affect this, then feel free to let us know. I see their profit margins are really bad, though, man. Like I'm looking at their financials, and it does not look promising. Their latest print for last year was negative 16 million on losses, and they posted $14.5 million losses just today. That's homie, that's not good. Company is marked as a strong buy by analysts with a 1-year price target of $4.50. I'd be really interested to know what that analyst is thinking. A marketing services company which leverages data and technology to deliver integrated branding, marketing, media, and analytics solutions, offers solutions to its clients through its operating units such as Troika Services, Troika Design, Mission Media Holdings, and the company was founded in November 2003, headquartered in LA. All right. I'll look into it. I'm sure that you're curious about. There's probably. I bet you this thing has absurd short interest, and that's why you're asking. Let me go look at it. So, short interest on Troika. Yeah, 14% of the stock is on loan. That's pretty high, but it's got room to go. Utilization is maxed out. How long has it been maxed out? Pretty long. Threshold list. Not yet. Failures to deliver. Kind of scary. Give it time. Market makers are in control of this thing. The on loan is likely to grow. I'll watch this one. I'll add it to my watch list. And I'll keep a note for it. this has downside to 30 cents, man. I don't mean to just shit on your parade, but this doesn't look good right now. The company is not in a excellent spot. If it is going to make a recovery, it's going to happen when the market maker says it's going to recover, and not before. Looking at the chart action right now, it's looking pretty bearish. I would expect it to bleed a little bit more, get down to 30 cents again, and test this liquidity pool. If it's going to pop, it'll probably come after it shakes out retail. So we'll look at this one. We'll watch this one, but I'm not gonna take a position in this one.
PD.
Yeah, what's up, Verde?
Wow.
Oh, that's Flab. I'm sorry. I'm sorry.
Oh,
Wow.
Sorry.
Wow. Unbelievable. Wow. Wow. Anyway, BBIG postponed the shareholder meeting. Just FYI.
wow.
Of course they fucking did.
Started counting votes and got scared.
Logical was talking about this all day. He's like, they were trying to print shares to get the vote the way they wanted it.
Special meeting will now be held on Tuesday, July 26th, 2022.
Those motherfuckers. They're going to let those options go worthless. Those bastards. Those fucking pieces of shit.
Yeah.
By the way, like,
postponement is intended to provide additional time for the company's stockholders to consider and vote on the proposals to be acted upon.
Yeah, they're still reaching out to people, asking anybody that has a significant amount of shares to change their vote to yes.
Yeah, fuck them. You're not getting your goddamn bonuses. Give us our fucking money, and then you can have your fucking bonus.
Demonetized.
Don't care.
So we can say shit now?
Occasionally. I'm probably not demonetized. You usually only get demonetized if you cuss up a storm within the first 5 minutes of the stream.
Gotcha.
YouTube doesn't have enough interns to sit there and listen to a 3-hour video.
Right. Well, the algo is the one that decides, but
TD, have you taken a look at LITM while this was all going on? I had to step out a few different times.
I haven't looked at it yet today. I haven't watched LITM. I've just kind of been letting that one sit and percolate. I see it's at support right now. I actually would expect it to suddenly just drop out of nowhere, big liquidity hunt, and then pop again. That's kind of what I'm looking for. This one, I'll average down on it if I could, but that's up to everybody else. That's up to the individual to decide. I like lithium mining because the lithium-ion batteries are the resources. It's basically a rare earth mineral. It's very difficult to mine. So these companies that have access to a quality mining operation and land to actually draw it out of, like these guys operate out of Argentina. They've got access to plenty of mine space, and they have high concentration of lithium. So good chance that they'll do very well in the ongoing market, especially once the shortages of lithium really start to pinch the auto and the chip makers and the battery manufacturers. Don't you just hate it when BBIG postpones and makes all of your shares more and more worthless than before? Oh, God. I just wish I could walk up to Lisa King and slap her across her big fat face. You know what I have decided? BBIG doesn't want money. BBIG doesn't want investors. It wants its investors to suffer. Well, I actually wasn't looking at my LITM charts. Sorry, I forgot to actually return to TradingView to show that when people were asking. But yeah, LITM, lithium mining play. It's called Snow Lake Resources, headquartered out of Australia. They have a mine in Argentina. And yeah, lithium's good. I like lithium. Demonetized for drug references. Maybe that's why my engagement shrunk, because I started talking about lithium so much. And they're like, he's into lithium. He's getting high on lithium. Demonetized for drug references. Okay, so short interest on BBIG. I see that we haven't gotten the refresh data yet. Let me see if I can go ahead and quickly get that taken care of. Maybe we've got some new data from FINRA. Hallelujah. Here we go. Ooh, 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 look at that print. Oh, wow. 500,000 shares, short exempt.
Glad you updated it. I ran it and I didn't have the update in.
Oh, man. That is upsetting. That is upsetting. Did my Mullen alert just trigger as well? Oh, it sure did. Liquidity hunt. Liquidity hunt on Mullen. Expected to drop to 95 cents. If you want to grab shares on Mullen, that is a good price. They're starting a liquidity hunt on Mullen. And now BBIG can't get shares from dilution for another month. You know what? Should have just let it happen. Should have just let the price run, motherfuckers.
Wow, the short volume was a third of the total volume today.
Hey, here's the Mullen chart for everybody. Just going ahead and checking that out. Y'all seen the BBIG short exempt print. 4% short exempt ratio. 4.79 actually. The total volume, 2.5% of that total volume was short exempt. That's huge. That's a massive print. The short exempts on BBIG have been absurd. So, like, if you really want to put pain on a market maker, you have to buy shares. I'm just saying, like, the options market is gone now, apparently. So I don't know. Not financial advice. It's all fraud. They're all stealing from us. We're all fucked. And fire and brimstone is raining down upon our heads.
There was 800,000 short exempts on the 24th, almost another million on the 27th, another 500,000 today. Like, Jesus.
Yep. As I said, guys, if you're looking for an average down in Mullen, they're doing a liquidity hunt after hours. Your chance to get some shares is down here at 95 cents. Look for a deep wicking candle to break down below 95 cents. Expect a recovery within 10 candles, and then that will signal a return to trend. Right now it's barcoding and it is post-market, so just be aware that that could be a fake out and it could gap down tomorrow if you don't want to take that risk. On the event of a gap down, the next level is 75 cents. Okay? All right. Well, now let's return to mourning the fact that BBIG's shareholders are all bleeding with us. Let us pour one out. Somebody go get me an Old English. We'll pour one out for our fellow bag holders in BBIG, including the long investors who are like, fuck no.
For you and I tonight.
It'll come back. They are delaying everything that they possibly can. You know what? I would agree to it if they had a write-in stipulation that they cannot dilute for at least 6 months. 6 months before they can dilute, and then they can have their fucking authorized shares. Yeah.
I mean, the good news for this thing is if they're pushing it back, there might be a legitimate chance that that they could have lost that vote. Like, I don't see why they would have pushed it back if they thought that they were going to win the vote.
They knew they were losing the vote. So wait, Dr. DeFace, how much do they owe in bills? What was that in reference to? BBIG or Hudson Bay? You let me know. I'm going to check on BBIG's short interest. See what the Ortex data says to us.
He said the shorts are the due bills.
The shorts are
the tide.
Oh, okay. Right on. Right on. What's the on loan like? Ooh, hello. Shares on loan, 57.75 million. 32.7% of the free float is on loan for BBIG. That is hilarious. What I say, don't give up, y'all. We've been at 100% utilization. I don't count this little blip. 100% utilization since the 30th of March.
Hey, real quick, while you have Ortex open, what is the Ortex on Enjoy? Just curious.
That's a good question. Yeah, I was checking it out a little while ago. Enjoy. ENGY. ENGY. I cannot English anymore. I can't even spell.
ENJY.
ENJY. Yeah, I got it right. I typed it right, but I said it wrong. Utilization is getting interesting on loan. Woohoo! See, the on loan is where the real information is, because then you can see what the market makers are doing. If the on loan is soaring but short interest is not going up with it, that tells you that the market makers are holding on to borrowed shares so that they can cover their fucking FTDs. They just borrow a share and then cover the FTD, and then they give it back to the lender, and then they don't have to pay their borrow fee. And then they wait for it to fail to deliver again, then they go borrow it again. It's a freaking carousel. Goddamn merry-go-round. Look at the lending volume spiking like crazy. Amazing. Cost to borrow. Oh, yes. That is a good trend. I like it. Now, the free float on loan is very minimal, but it can get out of hand if the short exempts are ridiculous. So let's go take a look at the short exempts on Ortex. Ortex does a very good job of illustrating this. I love that they added this in. You can do FINRA short exempt volume on the advanced chart, and you can see the short exempts. Yeah, they were pretty big. This is a small float, so this is like, I don't know what it is, like ENJY. What is their float? According to TradingView, it's 54 million shares. 54 million shares on their float. So you have a day like this where short exempts are 42.6 thousand. That's that is that 1% or 0.1%? It's 0.1%. Well, anyway, short exempts can get out of hand for this. Failures to deliver got ridiculous back here. What was this? Holy cow. I bet that was on the threshold list. What? It wasn't? Really? That didn't make the threshold list. Are you serious? Wow. NASDAQ's sleeping at the wheel. Well, anyway. That's enough information for ENJY. For those of you just joining us or weren't paying attention, ENJY just declared Chapter 11 bankruptcy, and their stock popped because they're getting buyout offers.
Speaking of which, You want to go into dev test?
Absolutely. Let's go take a look at that. Let me do something really quickly here. Okay, so what do you want to show everybody in YouTube land, Flabbergank? I'm in the dev test server.
Oh, geez. Are we doing this again?
Yeah, we're doing it live. You asked me to come into dev test. We're going to show the world.
Okay. Well, first subscribe to the Thingo. Do schedule the subscription. You know. We'll do it live.
We're going to do it live. Bankruptcy
Subscription.
Monitor.
Subscribe, Bankruptcy Monitor. It should only have default. Yeah. Let's do that. You've been subscribed. And now, what will
Print the
hopefully
feed.
happen?
Woo! Bankruptcy. Yay! Does this have a way of printing the ticker symbols, or is it a little bit?
Yeah. So I tried. That's what was taking me so long, but I can't get a reliable method of doing it.
Okay.
A bit difficult.
Gotcha. All right. Well, this is going to be implemented in the new release of ScourgeBot, so if everybody wants to subscribe to bankruptcy alerts, that's the latest feature. Fun stuff.
Yeah.
Okay.
So how long before Bloomberg Terminal asked to get access to our data feed?
That's a good question. Flabbergank is just a wizard who's able to implement everything that the stock market wishes it had.
Yeah, Bloomberg Smooth Brain Edition.
There you go. BBBY, getting horribly gapped by shorts. Theory floating around a vulture fund is trying to acquire for cheap, but the meme cycle is about to blow that all up. That's an interesting theory. Funny enough, I actually happened to get a BBY call, just a little one, out for February of next year. It was just a small bet. I went and got it at the money, and I'm holding on to it for the long term. We'll see how it does. It was a small bet. But the thing with BBBY is the retail cycle is just getting hammered, and the earnings was legitimately bad. Okay, like earnings was bad, real bad. So we don't want to be under any illusions about the actual performance of the company. It's not doing well. But I have some faith in Ryan Cohen as a businessman because he was able to take a suffering retail chain, taking a pet store to an online e-commerce pet store and supplier, and make it supremely profitable. So if he could do that with a pet store, I'm sure he can do that with a recognizable brand name like Bed Bath & Beyond. GMVD, I covered this one earlier, but I'll look at the chart again just to kind of recap real quick, and then I'm going to probably close the stream out. I've been streaming for over 3 hours now.
Who do you think you are, Matt Kors?
God, I can't. My voice can't do that. I can't even touch it. El Tigre. The dude's a marathon runner. So GMVD, the FTDs, I'm guessing, have been covered, and that's probably what a lot of this pressure is that we're seeing here, especially the after hours purchases. The volume is still pretty low right now. It could start getting covered here. We have a double bottom pattern on this 30-minute time frame right here. Double bottoms are good. Got to drop to this level and a green candle stopping right there on an equal level. What we need to see it do is to break out above the 200 period moving average on the 30-minute. Above the 1 hour is probably where it will meet resistance at around 75 cents. If GMVD starts to turn around, then that would be an excellent sign of strength right here. I'm trying to help people buy low and sell high. The FTDs, though, they've probably been covered because most of them were created up here and we're all the way back down to below 60 cents. So they probably covered most of those FTDs. I just got to be honest with you. That's 1, 2, 3, 4, 5, 6. Yesterday was the T+6 settlements time, and you'll notice that the price ripped as soon as it came out of the at the opening bell. The price just went crazy for all of about an hour, and then it just went sideways and down for the rest of the day and the evening. Got to be more patient with this one. Most retail is not being patient, and people are spreading themselves very thin. I know everybody wants to be playing these giant squeeze plays all the time to make like stupid money and become millionaires overnight, but it doesn't work like that. If you want to be generating wealth and you want to be able to play the market to your advantage, you should be trading with the trend of the overall market. Right now, the overall market is dying. It is dying. The market is down. The real estate sector is where I'm placing a lot of my short bets. I'm also shorting the banking sector, such as JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup. But mainly Bank of America as my primary. That is my primary I hate you bank.
FCC has authorized SpaceX to provide Starlink satellite internet to vehicles, ships, and planes in motion.
Oh, snap. Tesla, is your stock ripping yet? Tesla, win moon Tesla. I wouldn't trust it though. As much as I love Tesla as a company, the overall market is going to be a drag on it. So, not going to hold my breath. I'm staying with my thesis, and I am shorting the market. I am buying puts on just about everything that is retail, banking, and tech. I am only throwing a few small bets at little growth companies that I see potential in, but mainly I am sticking to that short thesis against banking, the housing market, and the tech sector, and lumber as well, because lumber is not doing well.
PD.
What's up, Flab?
What about going long on funeral industry ETFs?
What is that? Ticker death?
No, things like SCI, MATW. You know, the service corporations.
Gotcha. Go long on death.
Yeah. Yeah, man.
That's an interesting idea. I don't know how I feel about that, but oh my god. This thing's choppy.
Just like death.
You know what? I actually like the chart. It hit a bottom here and then recovered and retraced. That's a healthy move. It's actually right at support. That's funny. This chart actually looks really good, and the earnings are all positive.
It does, doesn't it?
It does. That looks like a really healthy chart, actually. I can't believe
Positive
I'm considering
earnings.
this. It's hilarious.
Positive earnings on a death company. Yeah, it seems there's rising demand, which is good for us.
There's rising demand in the funeral servicing industries. You know what? I should have seen this coming. Look at all the people that went long after the COVID recovery. Oh my god, it went 150%.
Yeah, dude.
Oh no. Oh no. This feels wrong, man. This feels too wrong.
No, but banking on a bankrupt company like Revlon is fine. Where do you draw the line? Cemetery real estate?
Cemetery real estate is where I draw the line. This is Hell's trading floor. We're all going there anyway.
Yeah, I'll hold the door for you, man.
You know what? Okay, I'll think about it. I'll think about it.
Lays in bed, stares at the ceiling.
Oh, man. Oh, the 2009 recovery, too. Wow, that chart looks shockingly similar to 2009, 2008. Wow. Wow, wow, wow. Look at how similar these look. I'm
They
looking
sure
at
do.
this and this. Look at how similar that looks.
Damn.
That's wild. And we're now at this point, so upside over the next year is 40%.
Yeah, and with the recession looming.
Yeah.
Yeah.
Yeah, recession looming. Wow.
Oh, you know.
Why am I considering this?
Did his scrap queen just wrote rates doubled cemetery near me for plots? You heard it here, folks. Cemetery real estate. 3x bull leveraged.
Oh, man. Have I seen the Redbox FTDs? No, I have not. I will look at that, and then I am going to go.
Contemplate your life.
I'm going to contemplate my decisions in life that brought me to this place.
I never thought I would YOLO into my own cemetery plot, but here we go.
Man, with people dying, infinite cemetery liquidity.
Infinite cemetery liquidity. Nuclear war cemetery stocks now up 30%.
Literally, they blew right out of the ground.
Wow, this ETF blew up.
This is wrong.
This
is very wrong. Oh my god,
it
utilization. All right, let's see what we came for. Oh man, dude. Red box. That's funny. Oh, I'm getting a phone call. I'm going to close the stream here. I got to take this call, but I want to say I appreciate you guys taking the time to hang out and stream with me. I'll look forward to doing this again next time. Until then, you guys have a hell of a time in the markets.